All right, let's see if that works. Streamlabs can suck sometimes. Apologize for the... hold on here for a second. Apologize for the delay. This has been happening to me the past week. Hang tight here. It's been happening to me the past week. And I did some investigating, and I think I found out what it was. Are we live right now, finally? Let me see. Oh, we got an upcoming thing here, too. What's going on with this, dude? Oh, yeah, I understand. Delete it forever. And then we'll turn that on. All right. Government, no. There's some issues right now with I'll tell you about it in a minute. Give me one quick second. Okay. So I lost my train of thought here. So sorry, let's get back really quick, just get back in here. So these bears want to do this down here, right? I'll erase all this down here. I want to show you one more thing. So we'll leave that up for right now. Bears want that on a Friday. So far, not happening, right? We got one bear cross. If bears had anything going for them, they've got this one bear cross right here. And when they stack them up, oftentimes it does roll down. They got one. They got another one right there. And they got another one right there, which is good. What else is good for bears right now? The half-hour trigger is coming down. You see it? It's not going up, is it? You see it? It's coming down. It's not going up, attracting price higher. We're not getting trend. So, yeah, if we trade sideways or bounce around or eventually bleed off, that's a possibility. That usually happens on a Friday, right? Bulls are like, yeah, we got no trend. Let's go home for the day. Let's wrap it up. And then the bears swoop in and they clean up towards the end of the day. As long as the dealers don't have to pay, as long as the dealers don't have to pay for, as long as the dealers don't have to pay for all the puts, right? So you would see something like this, something like that. Bounce down there. Well, I guess that's as far down as I can go right now. Maybe something like that. That looks ugly right now, so I apologize. It's Friday, baby. It's been a long week. We had Fed Day this week. It's been a long week. We'll keep an eye on that and see if the bears can get. They might get that. You see that hourly? Let's check the 30-minute hourly. See if the bears can actually get that. Yeah, the bears got. Dude, you're not getting that fucking. See this right here? What the fuck is wrong with you, bears? You can't be doing this. You need price down velocity. Still bearish right now in the hourly. This is intraday velo, so yeah, you might get a downside move here. You got some potential there if you're a bear for a downside move. Why does it look so weird? But look at them, dude. They're buying it. Yeah, bam, 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 bam. Hold on, let's look at something here together. These fucking bulls won't leave it alone. Let's check the hour. Look at them. It's kind of even Steven right now. Let's look at the 4 hour. Look at that. God damn. Jesus. Look at that. Sorry. That's so stupid. What do they call that? Coiling? We're coiling, baby, on a 1 minute. Sorry, it's Friday. I'm a little delirious at the moment. Yeah, I'll put that right there. The other thing I want to show you here would be, maybe right there. The other thing that I would show you here would be that I'd want you to pay attention to here is bottom right hand side. Be careful of this gap being filled down here. This is SPX gamma. So you see that 5. This is 520, 5225. See us heading down to close. See us heading down to close this gap right here, and then you catch the bounce to the upside. You can see the demand right here. So just be careful of that demand being over here as well, and stepping in. Okay, so right down. If you're gonna look at the top right hand side over here, just be careful. Want to see if these bulls are still hiding out here. I don't think they are. It's Friday, but if they are and they blast this down, be careful of a ricochet up. Even if we come back down over here, just be careful of it right in here, right in this zone. I'd be trying to like take the money. I'd be trying to take the money right here, and then get ready for a new position right here to try to take this bad boy down if the buyers are gone. If we can get underneath that gap. Let's keep our eyes on it. Yeah, right there's where you're looking to go, right there. That looks kind of right, doesn't it? Something like that, doesn't it? Add that over a little bit. Oh, look at how violent that is. Look at how beautiful that is right there. Ooh, yeah. Clean that up for you. Make it really nasty looking, like bam, 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 bam. Okay, so you've got what I've got. You got the take here. You know that if things, you know where your invalidation levels are from the market brief. You know that we are below it right, or coming into it right now. I'm going to get rid of this green right here. We're on the hourly trigger. So here's your invalidation level for the day. If you're a bull, if we break below the hourly trigger, that's not invalid. You need to reject and get a new low, and then it's invalid. Okay, so as long as you know that, then we'll start to sell the rest of the day. So keep your eye on it. No, if we break down, that's not invalidation. It has to reject, catch a new low. Don't forget your tools, especially bears. I know if there's anybody here that knows that rule now, it's definitely the bears, not the bulls. Bulls are dumb. But the bears know these rules now because they've been caught in them so many times that they've probably become very efficient at knowing when to watch this stuff. Currently, right now, they're in the clear because they got the cross right here. They got their validation level. You just stay short from up here. Start blasting this shit down. Just be careful of that hourly trigger right there. All right, I'm gonna take a quick break. I was gonna do the morning brief with the news and all that kind of stuff, but I haven't slept in I think 24 hours, maybe longer. It's probably been 36 hours or something like that, and I have to go over a brief with you guys at some point, a news brief. I don't even know where it is. I don't see it. But I have to do a news brief with you. I'll go over some stories that are coming out and some economic news. Now those Fed speakers, I don't Did you guys hear anything from Jerome? You shouldn't have. We got 2 more speakers today though, and they're going to try to get hawkish and try to talk the market down, more than likely, and they'll double speak as well. Then we'll talk about some of the expected. We'll talk about some of the expected. I'm going to put this here for you. Just going to snap this right here, right there. See, just so you can see where they're going to be. So I'll be back with you in just about 15 minutes or so. I got to grab some coffee and freshen up, make sure that I'm still here for the rest of the day. And I have to take a flight today, so I'm like really busy in the background as well. So let me give me like 15 minutes to take a quick break, and I'll be back with you in just a few minutes. Oh, why don't I sleep? So this was my birthday, and last night I had a family emergency, and I have to fly and take care of a family member. So I've got a family emergency I got to take care of. It always happens like this, every single time. Something awesome's going on. It's like wham. So it's like being a dad. Oh yeah, hopefully it's not a Boeing. Don't get caught here I'll tell you what you'd really like to see here. If you're a bear, I'll tell you what you want to see. You want to see like this rejection right here. Then you want to see this come up. What you really want to see is that right there, because that's a 3 trigger bear cluster. They're very powerful. You wind up getting like a violent move down to the downside, and it's like this, straight down. It's a beautiful thing. Clusters are amazing. It's like this like really big momentum move. This is a really bad drawing, by the way. I apologize for the shitty drawings this morning. And that would be a 5-minute back check right here. All right, right back with you guys. Give me like 15 minutes. I'm kind of like cracked out right now. I'm so grateful I didn't drink last night too. I've been so sick that I haven't been drinking, so I'm like, oh God, if I drank, dude, there's no way I'd be here this morning. No fucking way. No fucking way would I be here this morning. All right, back with you guys just a little bit. Give me a few minutes. I got some stuff I got to take care of. I got to get some coffee. I'll be back in just a few moments. Do you guys have some charts you want me to throw up? I can have some revolving charts. List off 3 tickers, and I'll put them up. First 3 tickers I can remember. 20-minute power nap. Yeah, I can do that too, right? What time is it? Like take a power nap till noon? AMD. I got one. AMD. Apple. I'll do Apple. AMD. And Sofi. Done. Hang tight for a second. One other thing. We're going to be trading some oil around here. Talked about it in the market brief last night. We're going to be trading some oil around these parts. I know some of you are against oil. I am too. I'm not an oil fan. I am a fan of lubricants and plastics. All your vehicles are made with them. All your tires are made with them. I think we need to save it. But there's a trade coming out. There's a juicy trade coming out. We're here to make money. If you don't like money, or if you don't like oil, make the money off the oil and then donate the money to an organization that's against oil. How about that? You can do that if you like. Show me that you donated all your winnings, and you'll feel good about yourself. Like you did a good deed. So we're going to take a look at some oil stuff, too, in the next week for the month of April. Supposedly, oil goes up like 5%. It's pretty decent. It's a pretty decent month for oil. So, and people are getting juiced up for it. They're anticipating it. We'll trade it through because a lot of you guys are cash market traders. We'll trade XLE, maybe XOM. We could do that too. But XLE, XOM will focus on those. I'll briefly highlight and stream CL for you. But most of our audience is cash market traders. But if you are a futures trader or a commodities trader, I will include some commodities stuff for you. so that you can trade that as well. So don't feel like you'll be left out. Just majority of people are trading fucking cash market. Okay. What else I got for you? AMD. Let's do AMD. Yeah, when you get me here all day long, you're gonna see. When you get me here more frequently, you're gonna see more of my life. I should say that too. Do you have any drawing? No drawings in here. If you see me here more frequently, you're gonna see more of my life, I should say. You're going to see days where I have to pick my kids up at school sick. You're going to see days where I have to go to a dentist, or you're going to see days where I have to go to the doctor, or that kind of stuff. Just heads up with that. So you see me here more frequently, like 5 days a week, 8 hours a day. It's going to be like a regular job, right? I got to go to a doctor's appointment. I got in a car accident, all that kind of stupid shit. So here's AMD. If you guys want my take on the AMD really quick, I'll give it to you. AMD is in a corrective phase. AMD is correcting down. And what makes did you take this as negative, I should ask? Oh, hold on. Are you wondering why AMD is in a correction? Do you want to have you want to give you a price target? 151.70. Do you want to know why I think it's going there? I can tell you if you want. Because there's a rotation going on right now. There's a rotation going on into small caps. Does that mean the market crashes? No. It actually means that S&P 500 and the Qs don't actually meaningfully correct usually. Because some of the holdings in small caps are, guess what? They're in QQQ, and they're in S&P 500. And if we have a rotation out of, listen to this closely, if we have a rotation out of S&P, out of QQQ, and the money stays in the market in small caps, but you have things like oil go up and XLE go up, that actually props up, at least props up S&P 500 a little bit more. So sideways action, a little bit of down, and then some up moves as well, like you'd normally have in a correction. So there you go. AMD corrective. Matter of fact, I want to show you this real quick. Bottom right-hand side. So here's AMD. This is on a 30-minute basis. You can actually see the daily velocity is heading lower to 0. It should go down to minus 25. And you should have a target down below of 151.70. And I'm going to tell you what's really bad about AMD here. This is what's showing the correction right here. You have the initial breakdown, right? But this is the key point right here. This is the orderly exit that I talked to you about. The orderly exit that I talked to you about. This is what makes the triggers and the velocity so excellent. One of the reasons that makes it so good is that you can actually see where the orderly exit is. If you're down here buying a dip, right? First, I could have told you before you even got there that it would break because we're coming negative on daily velo. That means that this is weak and it's not going to hold. I could have told you that myself. I would have told you it's not going to hold. It's going to break. But let's say you bought the dip anyways. Let's say you didn't have velocity, and you're like, "Fuck yeah, bro. We got the new high right here." Well, we kind of failed it right here, but I'm long on AMD, right? And all of a sudden you got roped down, right? Oh, Jesus, I'm so fucked, right? Oh, I shouldn't have said that, but everything is terrible. But what happens is you actually did get an orderly exit right there. Right where you took the trade. There's actually an orderly exit right there for you. So they gave you the chance for the orderly exit. You didn't take it. And because you didn't take it, you're now going to pay for it. We do this on 1-minute triggers all the time, don't we? Looks familiar, doesn't it? This is on a 30-minute basis, same structure as a 1-minute basis, right? So you should have already known this. You bought the dip down here. They rolled it down on you. They gave you the chance to have an orderly exit. Now let's say it went up. Let's say it went up. Would you have stayed in this trade? No. No, and don't ever have hindsight vision on that shit. Don't ever, if you see this recover, let's say this all recovered. Damn it. Hold on a second here. Let's say AMD had recovered. So you're down here, right? Yeah, baby, yeah. And all this recovered. And you're like, Captain Jim's told me that I should have sold here. Why, right? Because normally you get rolled down. You actually get rolled down normally. You took a trade over here. You had a plan. It went against you. You were given the opportunity to get out. So you get out, you clean your wounds, you cut your wound, like you clean your wounds up, and you reposition. And I'm going to explain it better for you right now why. You have a plan, right? Goes against you, you get thrown upside down, you get a chance to get out, you get out. And the reason being is because you still have not beaten your previous high, have you? You haven't beaten any of this, have you? And what's your rule? Your rule is that you have to beat your previous high, right? So you can't even enter this trade even if you wanted to. Even if you didn't get caught back here, if you were down here, you would not want to take that trade. You wouldn't want to take it along. You could take it along from like here to here, but that's it. That's coming down on top of you. You would want to have seen this come back up, get a new high, come back down here and watch the cross of the hourly trigger. Catch the 1 and the 5-minute trigger. Get yourself a 4-minute bull cluster. Get the new high over here. Bam, and you're off and running and recovering. Make sense? You will lose this trade more than you will win it if you do not follow what I tell you to do. The probability is actually against you here. And you have some other things talking to you here. You've got the daily trigger dropping down on you, warning you. You're getting warned. You're getting warned before we even got to this price here that we were going to roll down even farther. So you have every reason in the world not to have taken a long here. So as of right now, price target, it's trading 180. You're gonna next trade you're gonna trade 160, and then you're gonna trade 151.70. In my view, and there's no long here until you get above 186, and you actually get the new high back here, and you do a back check. So you're not even ready to take a long on AMD. Next one. You guys love when I get all bared up, don't you? Like, ooh, Cap's all feisty. Next one we're going to do is Apple. So there's no trade. And I don't care if it turns around either. You got no trade right now. And you get the same shit going on here with Apple, don't you? Now, Apple looks a little bit better than AMD. Even though it looks a little bit better, because you can see this here, right? You're getting a series of higher lows in velocity on the daily basis. One there, one there, one there. It's productive. It can actually still come down too, whoop, down there. But it's productive. This is good. It's possibly bottoming. A little bit better over here. A little bit better over here. Now it's on its monthly trigger. This right here, this monthly trigger, as long as we stay above it, we're still bullish in general in the stock. Like big thesis, long-term thesis, still bullish on it. As long as it stays above its monthly trigger, I'm still bullish on it as well. It does look like its corrective behavior is ending. Apple looks better overall. Now, would I buy this here? You might be asking. Would you buy this cap? No, I might buy that, but I would definitely have sold here. And they're selling it back down again. And there's some volatility in here. And guess what else is happening? We have a cross of the daily trigger below the weekly trigger. And this is your emotional trigger here, the weekly trigger. This is the one that gets everybody all hot sauce. They get all freaked out when price goes below. And they get all freaked out when price goes above. And also, price gets very volatile around the weekly trigger when the daily is crossing up and down, below and between it. You'll notice a lot of volatility. You'll notice a ton of people getting very emotional, sentiment-wise, believe it or not. Now, to take this trade on Apple, it's not quite there yet. It's below its hourly trigger. Would not shock me to see it come back down and just touch its monthly trigger at 163. But even saying that, it should stretch up higher again. I'm seeing a flattening of the daily trigger. This is good to see. I'm not seeing the daily trigger slide down right now. That's good to see. Sometimes the daily trigger will come flying down. It's not doing that. You can see prices attracted right now to the daily trigger. And you can see the slope is not as vigorous as it once was. So it's productive. It's not quite ready to be bought, but it's almost there. What I would like to see to take a long on the hourly trigger on Apple would be some productivity, right? Come up here, maybe bounce around a little bit, right? Swoop right up in here, bam. A little bit of productivity, a little bit of swooping, bam. And then a successful back test and a new high. I'd really like to, and it's a lot of volatility. You see it? Grind, 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 slam, 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 slam. When I tell you that we're going to 530 and it's going to be violent going up there, this kind of looks like it, doesn't it? So right about here, I would like to buy this right here, but only if the daily trigger or the hourly trigger, I should make that green. Only if the hourly trigger comes up. And I can also catch the daily trigger right here. Whoop. And I can see this weekly trigger that's just kind of chilling out. And that's a beautiful thing right there. Whatever that back test is right here, that little bad boy right there, you're talking about a moonshot. Moonshot. Because you're going to have a 1, a 5, an hourly, a daily, a weekly, and you're going to have price, boom. That back test right there, that momentum right there is going to send Apple to the moon. So until you see that, still no trade on Apple. Would not be shocked to see it trade 163.75. If I could buy that down there, I would, to be honest with you. And if this shit starts to roll back up, take it to the moon. I'm going to warn you of something. Do not, for a minute, believe. There it is right there. There's your next one right there. Target, price target, 190 on Apple. Do not drink the Kool-Aid that Apple's crashing because of this or that, or what's her face out there, Dr. Karen, or whatever her name is. Don't accumulation, distribution. Accumulation, distribution. Don't worry about the news. They fit it for the price. It's correcting right now. Do I think Apple's going to zero? No. Do I think it matters that they have an antitrust suit? Fuck no. No, I don't. I'm sorry. Right there. But you got a lot of work to do down here. This could actually take some time. This might actually take like grind, 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 boom, grind, 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 boom. But certainly not bearish on it at the moment. It's flattening out. It's on its monthly trigger. I will say this. If you get under $163.75 and you reject it and you get the daily trigger, the hourly trigger, and the weekly to come down there, I'm going to get bearish as fuck. So if you get down there, yeah, you get below that number down there, yes, I will get bearish. We'll get real bearish on Apple. We'll get bearish on the market in general if that happens. What was the last one? Sofi? Nope. So we got these two, and the last one will be Sofi. I can't believe I'm still sitting here right now. I got to take a break. Sofi Technologies. Oh boy, Sofi. Actually, this is a good one to look at because I was just talking about Apple, right? See how wild and crazy it gets in here with the daily and the weekly. This one is this one's fairly bullish. Fairly bullish. Although I think you're not done going down. I think you might still get one more down move here because your weekly, yeah, see your weekly velocity is getting bearish again down here. But even so, your monthly velocity is coming up. It's turning up. So I would go with on SoFi some kind of a zone. And as long as you're just bouncing around in here, it's eventually going to turn up. So I'd be looking to be a dip buyer down below here. And do I think you can get back down there? Fuck yeah, I think you can. I think 1 week of market weakness and you're right back down there again easily. Easily. But what's happening here? You see that monthly turn? That's beautiful right there. See how they're selling it down right here? Bam, bam. If you can get above, if at any point in here you can get above, and all you need to do is get up here. Whoop, right there. One more right there. If you can do that right there. If you can do that right there. You get the hourly and the daily trigger to come up for you. You get that bad boy to cross the blue line. If you can get above about $10, you can get above $10. Johnny on the spot over here just waiting. Or you trade this up and down like buy the dip, sell the rip. Buy the dip, sell the rip. Buy the dip, sell the rip. One more blast down, big time buy, right? And then you get that daily trigger cross right here, that sweet, sexy daily trigger cross right here, like that. And if you can see that happen right there, that's your trade right there. Big trade for SoFi. I like that you offered or asked about this ticker because it's Apple is a good one and SoFi is a good one because they're working towards. I always ask you guys to do this before it happens, and this is a before the happen ticker. I don't think this all this happens, but you might get one big blast down and then squeeze up, and then we're off and running. Set an alert down here at like $4, $5, $6. If you can get one more like market doom, market red for the day, and then boom, we're off and blasting. I like the ticker. I like the stonk. What does SoFi do? I have no idea. I'm just being interviewed on CNBC right now. That shit was hilarious. What ticker was that? I forget what the ticker was. Do you guys remember that? Any of you guys know what I'm even talking about? Yo, it was Upstart. It was fucking Upstart. That shit was so fucking funny. I love the stock. And they're saying Roaring Kitty. Fuck that guy. He doesn't know what he's talking about. Got a fucking pro on TV. I love the stock. It was great. Yeah, but yes, better be greedy. He was super honest. I don't dislike him. I just thought he was like, I don't know anything about it. I thought it was fucking great. I just thought it was wonderful. All right, so they come back to this check, right? This is the check trade. Remember I said they're going to come back here and check this? You want to pay attention to this here. It was fucking great. If you get run back over here, if you're a bear, your stops are right here. It was fucking great. That was fucking awesome. Yeah, your stops are like right here. I guess if you're a fucking bear, but you're gonna get run over anyways. You ain't gonna win this shit, dude. The market is supportive. I do want you to know that if your stops are up here, if you're just joining us for the first time, if your stops are up here, what do you do if you hit your stops? You most definitely do not get your stops taken out there. You wait for it to come back down before it rolls up. They give you an exit. Remember, they give you an exit. Maybe I should draw it like this. If that's your stops, your stop execution is down here. Right there is your stop execution. Ah, shit, they hit my stops, bro. Squeeze me out up here. Yeah, but it's coming back down. That's where your stop execution is actually right there. Down here. Okay? Okay. I'll be back. 15 minutes. All right, I'll be back with you guys in a minute. Happy Friday, by the way. Happy Friday. Happy weekend coming up. I'll be right back. Get rid of that shit. Some of you guys are like, I'm like, where's your stops at? You're like, my stops? They're way up here. What do you mean your stops are up there? I just buy puts and hold them till they're dead, till they're worthless. Just hold them till I can't do that. I gotta get rid of that shit too. Come on, Bears. You still got time here, Bears. Still got some time here. All right, I'll be back with you guys in a minute. Yeah, like stops and then stop execution. When people, oftentimes I think as a trader, you'll hear people say, do you keep stops or not? And people are like, I hand stop, bro. Other people are like, oh no, I always run with stops. Futures traders always, well, you should run with stops, right? But then there's a question of when do you execute the stop versus you just cut right here. Futures traders oftentimes are already triggers, but if you're like an options trader in the cash market, you'll notice it comes back down and you can exit. You'll get cut up, but it won't be as bad as it could be. Could be a lot worse. Okay. I'll be back with you in just a bit. I mean, what is this? Apple faces years. Like, Apple faces years. I mean, what is with these fuckers? Like, no offense, but Apple faces years of distractions after GOJ antitrust suit. I'm like, you gotta be fucking kidding me. What the fuck does that have to do with the price of fucking Apple stock? The fuck does that have to do with the price of Apple stock? Nothing.
Darden Restaurants also talked about it.
That story will be buried by election season. I promise you. You'll be blabbing about it for the next 10. You'll be blabbing about it for the next 2 weeks. In 2 weeks, they'll be on to the next story. Whatever happened to KRE? Whatever happened to KRE? I know some of you still talk about it, but whatever happened to it? The story's gone.
The strain of high price levels. We can see this in various signals. For example, household delinquency rates, particularly in the credit card space, have been rising basically for 2 years now. And so you do have this tension. Look, the job market's been strong. Wage growth has been solid. That supports consumption. But the high price level is increasingly a strain on some households' budgets, and I think that's why you're hearing kind of this mixed message, because it depends on what.
Dude, they gotta mix so much shit up. It's not even funny.
Some of these calls that we just
Now they're doing a mixed message. There's no mixed message.
1% forecast.
It's like bear. It's like CN Bear. What are we gonna call it? CNBC, CN Bear Fridays now. CNBF.
Those rate cuts that the market is expecting. But on the other hand, if this consumer strain that I mentioned builds and builds, eventually you could be at a point where consumers really do retrench in a more sustained fashion. And then business will have to think about, well, wait a second, all this hiring we've been doing hasn't been actually too much, right? That's where you get to this downward spiral that could be self-reinforcing on the downside. I don't think we're quite there yet, but it is something that we will need to watch carefully over the remainder of this year.
Thanks for weighing in, Ryan. Appreciate it.
Thank you very much.
Still to come, inside the activist fight as inside Disney, as shareholders take sides, backing Iger or backing Peltz. Disney, the best performer in the Dow this year. We're going to get into it.
Plus, we're going to get to FedEx, why that stock is surging after results. Money Movers returns after this.
Fiverr.
Take a look at shares of FedEx. Still up nicely, although had been up a bit more in the very early going. This after beating on profit expectations after it reported earnings last night, despite operating in what its CEO called a, quote, difficult demand environment. Also announcing a new $5 billion share repurchase program. Earnings as well. That earnings beat coupled with a raise of guidance. 5 firms raised their price targets. Barclays is now at 350, saying the results came as a relief for the bulls. That is almost a 3-year high. Sarah, we said earlier on the 10, the express margins at 2.5% are not great, but they basically had no margin at all. So they are showing some real improvement there in terms of the cost cutting taking hold.
And don't take anything bullish about the economy on it, because they said on demand it remains challenging and weak for global trade. Let's turn now to Disney and Trian's Nelson Peltz. ISS, the proxy advisory firm, announcing support this week for Peltz and his bid for a board seat, joining a list that includes companies like Home Depot, Mondelez, Procter & Gamble, former CEOs and former board members on that one. Disney issuing its response yesterday, citing its strong stock performance in recent months, which has been higher. Look at that, up almost 29% year to date. Joining us now to discuss, founding director at the Weinberg Center for Corporate Governance, Charles Elson. And Charles, I was really excited to talk to you because how long have you been looking into Disney's board and governance?
Oh my gosh, for almost 3 decades. they've had an interesting tale for a long time.
And you've taught classes on it, so I am curious how you view this current proxy fight and which side you agree with.
Well, I've got to say I have to agree with Mr. Peltz here. Listen, this company has been a governance problem for almost 30 years, dating back to the Eisner days. It's a board that has been seemingly dominated by the CEO, whether it was Mr. Eisner, and I think today Mr. Iger sort of falls into that. It's a very supportive board. And the problem is, I think, the issue is the board itself. What kind of oversight have they exercised? And Mr. Peltz has argued that you need someone in there with a different viewpoint to spur them on to effective oversight. And I think that he's got a good point. You've got to figure, number one, they really bungled the succession process. A, the fellow did not turn out as they had thought. But B, more importantly, Mr. Iger never really left. He was executive chair, which means effectively he was still calling the shots. And he was paid to do that. But again, to blame the problems on the successor that was picked obviously by him as opposed to the board in a normal search process where the CEO would not really be involved was concerning. And he fails. They bring the old fellow back in. The stock was down, and that's just not good oversight.
So is their primary criticism the succession? Because I think they probably would admit that didn't go as planned and didn't go well, but now they're doubling down. They've also, James Gorman has joined the board. He just got through a successful succession over at Morgan Stanley. So what troubles you about the current structure?
Well, it's really basically the relationship between the board and the CEO. And the CEO, Stryger, really has a direction, and they've supported him really for years. The fact that the succession failed is important because it tells you he drove it. It failed. And is he the right person to get you out of the woods? The person who got you into the woods and lost isn't always the right person.
Be careful here, Bears. They're going to buy this shit. See this down here? Be very careful down here of this getting by. You might see a quick liquidation breakdown.
Right, appropriate.
And then slingshot straight up. So be very careful there if you're a bear.
That was a very positive thing. On the other hand, the board itself is basically the same as it's always been. It hasn't bought a lot of stock in the company itself, actually very little, so they're paid in stock. And the alignment doesn't seem to be there. And bringing someone in from the outside who's been on other boards, who can ask the right questions, I think is important. And listen, maybe they change course, maybe they don't. But you need someone in there representing the interests of all the investors. And I think, frankly, given his record, he's probably, at this point, the best person to do it.
I would point out, you're right, Iger did become exec chair, although he was not in that position for the entire tenure of Mr. Chapek, which extended at least, I think, another year plus, where that was not the case, obviously, and the chair passed to a different person. Were you surprised? I mean, yesterday in ISS, the proxy advisory firm, came out, Charles, and seemed to focus on the same question as to why they're supporting Mr. Peltz, though not Mr. Rizzullo. It was almost all about succession. But again, to the point Sarah made, and I think you would, that that's kind of in the past. They say, listen, we've got a different board now, and we're going to do it differently, and Iger's got a couple more years to get us on firm footing, and then he's going to go.
Well, that's what they said 3 years ago. I mean, that's the problem. Do you really have faith in this group given what happened? And I think the answer, frankly, is, in my view, and I think ISS reached the same conclusion, was no. It's time to bring in new blood, or someone to rattle them up a little bit. Or I wouldn't say rattle, but to raise the questions. And I think he's as effective as anyone else to do that. Someone who is picked by the company itself to come in at this point in time, I think it has a problem because they owe their deceit to Mr. Iger. Mr. Peltz, if it comes from the shareholders, wouldn't. And I think that that's the whole point here.
Yeah, but what are they playing for here? It's, Iger's, he's already 72. He's already been I'm confident that when he says he's only going to serve another 2 years at most, that's the case. It's not like he's looking to maintain or continue to exercise any power here. So wouldn't it be a different process, perhaps, than the one they faced in the past?
No, I don't think so. Listen, I can think of several folks in their 80s or later who remained at their own companies well beyond. I think AIG was always a great example of that. And you've seen it other places. Sometimes people just don't want to go. And he wanted to go 3 years ago, but he didn't. He was exec chair, kept the same office, stuck around. And that was probably not the greatest thing from a governance standpoint. Once you go, you go. There are a lot of good people, talented people in the world. And listen, he could get hit by a bus. The world doesn't stop. There's a lot of people out there. And they should have been focusing on that, both internally and externally. And they didn't, which is why the problem has developed, which is why it's not a bad idea to bring someone else in from the outside to ask those questions from time to time. I think it's healthy, frankly.
Well, I'm curious what your studies over all the years and in different other scenarios like this have shown about fights with activist investors, when they win, when they join the board, especially when it gets ugly like this with the relationship with the CEO.
Well, it's interesting. You have to go back and look at Peltz's fight with DuPont years ago. Peltz had been arguing for it, if you recall, the split up of the company. He lost by just a little bit. But within a couple of months, the CEO was gone. New CEO came in, Ed Breen, and they did exactly what Peltz had been advocating. So he couldn't have been that far off. You look at whether he was at Heinz, which was ultimately successful. You look at a number of companies that what an activist does is it forces you to re-examine dogma. That's all. And that's a healthy thing. Because even if you ultimately conclude that we're going to do what we've been doing, at least someone poked you a little bit to think about it and had it justified. Sometimes you change course. And I've seen over the years, it's positive. Now, sometimes they're not. Sometimes they have different goals than the other shareholders, and that's problematic. But generally, it forces you to rethink dogma, and that's the key to the whole thing. No one should, particularly a CEO, inspire dogma. That's why you need someone to ask a question from now and then. And if he's wrong, he'll be wrong, but at least the question will have been asked. And I think that's exactly what ISS was getting at, and I frankly agree with them. I think it's the right thing to do here.
Well, we appreciate you phoning in to weigh in. Charles, always curious about your take here. Charles Elson.
If they do make that choice of Peltz, they may have an opportunity to think about succession a lot sooner than they thought, that board.
Because he would raise it?
Because it's not clear to me that Iger would stay.
Oh, that he would stay.
Yeah.
But we don't know which way it's going yet. Number of big shareholders come out and
the vote. Yeah, it's
Powell Jobs, George Lucas.
Yeah, it's unclear. I think this again. I say this every day when we talk about it. A lot of confidence in the Disney camp that they're going to.
But Iger has not said he would go, right?
He's not said in any public way that he would.
You're speculating.
I guess I would leave it in the realm of speculation. Yes.
Okay. Still to come, Nike and Lululemon falling on poor guidance. We're going to break down those results for you next.
Plus, a look at the debut of this week's two notable IPOs. We're talking Reddit and Astera Labs. They both surged in their first day of trading. What does it mean for that all-important IPO pipeline? We'll discuss that right after this.
Women own more than 14 million, or 39% of all businesses in the U.S. That's an increase of nearly 14% in the last 4 years, growing at a faster rate than male-owned businesses. Female business owners employed more than 12 million people and generated nearly $3 trillion in revenue last year. For Women's History Month, I'm Julia Borston.
Take note just now that we have a half-hour trigger developing on Reddit. See the half-hour trigger right here? You have price back-checked. Is it gorge? This is the first one, I think. We had a 3-trigger bull cluster on Reddit. Back-tested. We now have a cluster of a half-hour trigger, 1-minute trigger, blasting up right now. Reddit looks extremely bullish right here. Let's bring this on a 30-minute basis. Reddit looks great right now. Really good right here. Reddit with a 3-trigger cluster to push up higher. Just had a new high just then, too. Reddit looks really good right here. Relatively speaking, looks great. Half a 1 and 5-minute trigger now crossing over the half-hour trigger on the new Reddit trigger. And be careful out there if you're a bear. Be very careful.
Jim.
European markets edging higher this morning. The German DAX touching new record highs as business sentiment over there improves. The index beating expectations with a report saying that the German economy, quote, glimpses light on the horizon. Meanwhile, over in Asia, the Japanese market, the Nikkei, also hitting record highs to close out the week after Bank of Japan did raise rates this week for the first time in 17 years. The news not as rosy in China. The Chinese currency, the yuan, falling to a 4-month low against the dollar after the People's Bank of China decided to loosen controls, lowering its daily fixing, which is how they manage the currency, by the most since early February. And then state banks came in and ended up propping it up. And the view there is that the People's Bank of China has room to ease more. And they're starting to say that. And that pressures the currency, especially when they let it flow a little more freely.
Right.
AMD trading up now to try to trade its hourly trigger. Let's see if it can get higher. Let's check its hourly trend right now.
Truth Social is
Let's check 30-minute trend, still bearish right now on AMD, so be careful of a reversal to the downside.
the deal, which could net the former president an eventual windfall of $3 billion or more.
AMD trying to get above its trying to get above 179.49 and 178.55.
Massive.
I think it still reverses to the downside here because the hourly value is quite negative, or coming into just being negative. It's like minus 10 right now, but we'll keep an eye on it in case it does squeeze higher. It could possibly squeeze.
At least 3 people. The country's hydro
At least, wait a minute here.
says the dam is
You might get a nice squeeze up here, at least to
will be able to catch the
with a failure like right there.
on the big
Maybe 182 on AMD is possible.
sister company.
Possible. I don't think it's going to happen. I think you're going to get stopped out at
The 2020
180. Trading 177.27 right now. I'll give you this right here. I'll give you 180.
Paris's opening ceremony will be the first ever not held in a stadium. Organizers plan to send the Olympians down the River Seine past iconic sites on nearly 100 boats, and then it'll end at the Eiffel Tower, where they will light the Olympic flames. It should be quite a production.
That sounds amazing. Let's go to IMAX, David, for opening ceremony.
Okay, you got it. I'm there.
All right. Thank you, Bertha. CEO of Invitation Homes coming up next on the move in mortgage rates and the supply of single-family homes. This stock is up 21% in the past year. Don't go anywhere. Let's get to this week's housing data. Homebuilder sentiment turned positive for the first time since July. Housing starts, building permits, and existing homes all jumping in February and beating estimates, with single-family home sales rising more than 10% from the prior month. Joining us now is Invitation Homes CEO Dallas Tanner. Dallas, thank you for joining us. And so just explain your business, because you operate a REIT that invests in these single-family homes and what you're seeing.
That's right. Thanks for having me, Sarah. Our company owns and operates over 100,000 homes across 16 major markets in the U.S. with the goal of, sort of targeting our approach to the missing middle, people that are looking for choice and a chance at building credit and positioning themselves for either homeownership or education or starting a business down the road. So we fit into that segment of the 47 million households that rent something somewhere in the U.S. today. What's happening in the rental market right now? Unbelievable demand has sort of been the story the last 5 to 7 years. And that's due to really the villain being supply. We continue to talk about this lack of supply. We need somewhere between 3 and 5 million more housing units. And they come in all shapes and sizes, right? You have 2/3 of the country that owns something, 1/3 of the country that leases something. And I think there is sort of this missing segment for people that don't necessarily want to be in an apartment, but are looking for a single family home with a yard and a garage and better schools and access to some of those things that we all want in our own neighborhoods, while not having a down payment that is burdensome. And so that segment of housing, that segment in the for lease business has had incredible demand and really high occupancy and an overall great experience that is letting the customer choose to stay longer and longer and longer with companies like ours. The problem has been higher prices, though. The problem for the Fed and for our economy and for renters. And because of that short supply, the rental prices haven't come down as much as, say, you might have thought with rates up and the environment that we have. Why not? It's a really astute point. And I think what you've got to think about is what has gotten us to where we are today. We had a decade of really cheap money in the housing market and in the system, while we've had regulation at the local and state levels get trickier and trickier for people to be able to develop and build new product with ease. That combination is a perfect storm for housing prices to stay elevated for some period of time, even while maybe we've been in a slower growth cycle. I think if you look at some of the mortgage data over the last year, you'll see that home prices are up on those locks 4 to 5%, but the actual volume is down 8%, which is indicative of a 7% mortgage market. And I think that's sort of the high watermark where the consumer is having a hard time making a decision about buying something in a market that is undersupplied, quite frankly, by probably 40 or 50% from where we'd like to see it from a resale perspective. We've sold over I think right around 12,000 homes in the last 5 years back into the marketplace to the end user, and we have an insatiable amount of demand for that product.
Yeah, I was actually going to ask how you approach sort of taking those, increased, taking the capital that you have, obviously it's increased, and or buying new homes. So how are you approaching sort of the management of your portfolio in terms of whether you're selling, as you just said, you have some, and or buying?
Yeah, we consistently sell back into the market, and we're building brand new product has been our focus for really the last several years. We can sell homes back into the market at a very accretive basis, and then recycle that capital into a much better performing long-term asset for our business and a brand new product for our customers. So it's a win-win. That's sort of been our approach over the last several years, with a few M&A opportunities along the way. Cost of capital has obviously been sort of an interesting ride for most companies the last year or two, but our business performed remarkably well. Like I said earlier, we're 97.5% occupied. We're seeing revenue growth in the mid-single digits, and we have a customer that continues to stay longer and longer. So we've got to find ways to develop and build new product in markets and parts of communities where people want to be, where they want to be down payment light, and we'll continue to execute on that strategy.
Dallas, thanks for the report on the rental market. Really appreciate it. Dallas Tanner of Invitation Homes.
Well, we have some breaking news on that government funding bill. Let's go over to Emily Wilkins on Capitol Hill. Emily.
Hey, at this point, it does look like the House does have enough votes just to barely pass that $1.2 trillion spending bill. Now, of course, nothing is final until the gavel falls. People can obviously still change their votes, but at this point, it does seem like this is on the track to passage. But this isn't really a great moment right now in terms of Speaker Mike Johnson. You are seeing a number of Republicans come out and vote against this bill. More than 100 so far have opposed it. And we know that that's because of concerns about a lack of border security provisions, as well as a number of earmarks that were added in by the Senate that do things like bolster facilities that provide abortions, as well as facilities that help the LGBTQ community. And those have really raised some concerns among conservatives. You are seeing also a couple progressives vote against this because the bill does not give any funding to a United Nations program that helps Palestinian refugees. Now, at this point, even if the House does pass it, a shutdown is yet to be avoided. The Senate now has to get its job done. At this point, we don't know when they're going to vote. They need to get an agreement from all 100 senators to be able to vote before midnight tonight. Otherwise, we could see a short weekend shutdown. Guys?
Okay. All right, Emily, we'll keep an eye on it. We know you will for us as well. Emily Wilkins on Capitol Hill. After the break, what the Department of Justice got wrong and may have missed in its antitrust suit against Apple. Plus, as big tech faces increased regulation, we're going to look at how Microsoft has managed to avoid some of that scrutiny. Stay with us.
incredible.
The Department of Justice's antitrust chief appearing on Squawk Box this morning following a more than 4% drop in Apple shares yesterday. Steve Kovac is with us. He has more on that and, of course, what the DOJ, in fact, this is interesting, Steve, what they may have gotten wrong in that lawsuit that, of course, brought about that significant fall in Apple shares?
Yeah, just some interesting stuff in the lawsuit. But first, of course, that fallout from the DOJ's broad antitrust lawsuit against Apple caused shares to plummet 4% yesterday, wiping out more than $100 billion in market value from Apple. DOJ's top antitrust official, Jonathan Kanter, had a message for Apple investors in an interview this morning on Squawk Box.
So my message to shareholders is encourage companies that you invest in to compete on the merits. Competition on the merits is good for everybody. It's good for businesses. It's good for consumers. It's good for the economy. And so ultimately, that is what this lawsuit is about. It's about making the market more competitive so that people can pay lower prices, including for their iPhones.
So there's the investor angle. And look, we spent a lot of time yesterday talking about the DOJ side of the argument, but it's worth pointing out now some of the, let's call them funky allegations in this lawsuit as well. Some examples among many, the DOJ alleges CarPlay gives Apple leverage over automakers by forcing them to give Apple access to key systems in the vehicle. That's not entirely true or how CarPlay works. Also says Apple, quote, affects the flow of speech through its Apple TV Plus service. Don't tell that to Ted Lasso. And some irony here, asking Apple to open up its platform so other tech giants, that includes companies like Google that the DOJ has already sued twice, in fact, for antitrust. Those have a greater advantage under this lawsuit if it goes the DOJ's way. But none of this is to say the DOJ case is without merit. And the overarching argument that's going to be played out, guys, is going to be decided when this goes to trial. Are Apple's practices designed to make the customer experience as good as possible, or are those choices just designed to stifle out competitors, guys?
So what kind of fight is Apple bracing for here, Steve?
A big one. They are trying to protect everything that they possibly can here. But what I was pointing out here, stuff like that they mention in this lawsuit, like CarPlay and things like that, it's almost like a fundamental misunderstanding of how some of these products and services from Apple work. They do have some interesting points about the behavior of Apple with things like messaging, and of course the App Store rules are under high scrutiny, not just here across the world, but you know, there are more questions also that get raised about this, Sarah.
Yeah, I mean, the wallet and the watch, that was part of it. We were talking with the Connecticut Attorney General. I didn't quite follow all of it, frankly, Steve.
Yeah, and the theory there is like, okay, so the wallet is one thing, but let's talk about the watch and other hardware accessories. The idea is if we make the third-party watches or third-party Bluetooth headsets that aren't AirPods kind of less capable, that keeps people wrapped into the iPhone ecosystem, and therefore, when they're ready to upgrade their phone, they stick with the iPhone. And by the way, those phones are getting more and more expensive as the years go on. That's kind of the overarching argument from the Department of Justice, David.
Steve, thank you.
Yep.
It's going to be quite a few years of covering this for you, Steve
Indeed.
Kovac. The DOJ's suit against Apple just won in a number of regulatory battles that big technology companies certainly are faced with. FTC, for example, Amazon and Meta, DOJ and Google, or against Google. One mega cap, though, that at least right now has seemed to dodge some scrutiny, Microsoft. Deirdre Bosa digs into that for today's Tech Check. Dee.
Hey, good morning, David. So that divide you just explained could not be more clear this week. Apple was hit with that giant antitrust lawsuit you guys were just talking about, all while Microsoft seemingly outsmarted regulators by poaching Inflection's top talent without buying the company. Now, CNBC has learned that that deal includes a $650 million licensing fee to Inflection, and that, according to the information, helps provide investors with a modest return on their capital. Of course, there's also Microsoft's cumulative $13 billion investment into OpenAI. Satya Nadella telling board members back in November, quote, if OpenAI disappeared tomorrow, we have all the IP rights and all the capability. We have the people, he says. We have the compute. We have the data. We have everything. We are below them, above them, and around them. Quite the deal. Now, regulators have indicated that they are looking into it, but it's not nearly far along as the other lawsuits that you mentioned against the other mega caps. And so the others, they're not being nearly as bold as Nadella. Whether they can't or whether they won't, that's still an open question. Regulators, they're already scrutinizing their businesses, and in Google's case, it's past a decade of acquisitions to reach the dominance they now have in search. Microsoft also has more experience battling regulators that could be giving it an edge in this new era. Their secret weapon, Brad Smith, he played a significant role in the antitrust battles of the late 90s and early 2000s. Alphabet is trying to make Ruth Porat that person for them, announcing last July that she would move into a similar president role, communicating more with Washington. But it's been nearly 8 months. She is still in the CFO role. At Apple, that person is yet to emerge, so that'll be interesting to watch. And the stakes are only rising here. Access to the most highly coveted AI technology and talent, that could play a big part in deciding the winners and losers of this AI era. The other piece, guys, that's very interesting, and I wonder if it could come into play, is the Elon Musk of it all. The emails that OpenAI published about a month ago that showed his anxiety about how dominant a force Google was in the early days of Gen AI. If you remember, he was like, maybe there's a less than 1% chance that OpenAI could compete with Google, and it has. So it could go either way. The regulators could look at that and say, okay, capitalism has done its job. OpenAI has become a force, or they can just show how Google's able to reach this dominance with their distribution, their reach.
Yeah, I mean, which also puts into perspective the news earlier this week that we've yet to see any announcement on about Gemini being used by Apple, potentially as its AI platform on the generative AI platform on the iPhone. It's funny, Dee, just to get back to Alphabet, because we've had the conversation, I thought a very good one, and you've been reporting on it, the sort of question as to their monopoly in search at Alphabet and whether it was under siege, although I did note the stock has had a very good week, has Alphabet shares, including even today, as people seem to be sort of continuing to debate that, but wondering, to your point, whether they will actually ultimately prove that they can compete when it comes to this new world.
You know, they're doing everything they can. And remember, the week started off with that report that Apple would use Gemini to power some of the AI features on its phone. So again, this race is so up and down. And at least this week, Alphabet has the advantage because a company like Alphabet or Apple with its installed base could be using Gemini and distributing that. But next week could be very different. I was at GTC this week, David and Sarah, and I was at that talk with the 8 seminal authors on that Transformer paper, which really just set the groundwork for this era of generative AI that we're in. They all came from Google. And they were asked by Jensen Huang himself, why did you leave Google to go start your own companies that are now sort of darlings in the Gen AI space? And they just said, essentially, they didn't ship stuff at Google. And generative AI needs to be tested in the real world. And that is sort of maybe the pain point here. How quickly does Alphabet want to move? How quickly is it willing to disrupt its existing business or not? And that's going to be key going forward.
That's a really interesting insight. Deirdre, thank you very much. Deirdre Bosa. Wells Fargo cutting its price target on both Lululemon and Nike after results last night, adding that the bulls are running out of patience with Nike. The analysts behind those calls coming up. Don't go anywhere. Nike and Lululemon both falling hard this morning after both issuing softer guidance than the street was looking for. Our next guest lowering his price target on both the stocks, sticking on the sidelines for Lululemon, worried about the U.S. slowdown, but still with an overweight rating on Nike, noting that new shoes in the Olympics could give bulls some hope. Joining us now is Wells Fargo's Ike Borchow. Let's start with the Nike call, because you took down your price target, but still see almost, at least 20% upside for the stock. So you have confidence in their innovation turnaround here?
Yeah. Hey, Sarah. So I think what's good about Nike right now is this is all about recovery. The margins are depressed, the productivity is depressed, and you have an agent of change that has started. The innovation process has finally begun to pick up. There are green shoots being spoken to. I'd say the number one thing that they talked about right now is Dynamic Air. It's the newest innovation platform they've had in a long time. They're going to scale this across their leading Air franchises. Air Max DN launches in 4,000 stores next week on Air Max Day. There's been some good buzz so far. It's still a TBD, but this is kind of where you need to start. It's all been about a lack of innovation, and I think you see that pipeline finally starting to pick up, which is good.
The green shoots, it's a word that they used on the conference call yesterday too, Ike, and we saw that in the quarterly numbers, but then when they did the preliminary forecast for fiscal 2025, expecting negative growth in the first half, wasn't that a surprise to Wall Street?
Yeah, and we previewed it and said the street was too high for fiscal 25. I think the street was a little bit optimistic. I think, Sarah, what you have to understand is, assuming that they're going to be hitting their plans, they're calling it life cycle management. So there's a management of key products that is going to create some near-term headwinds to the business. This is basically temporarily offsetting the scaling of new products. Think about older franchises that they need to kind of reduce inventory and SKUs in the marketplace in order to start pushing new innovation. It actually ends up being a near-term headwind to revenue. I think they were signaling that to the street for next year. I don't think that offsets the improved emotions around the innovation, but that's the issue that happened with street numbers on the call last night.
Well, and the other thing investors have to be asking themselves right now is, are the right people in place to execute this turnaround in innovation, which is Nike's bread and butter? There have been a lot of changes that John Donahoe has made in the last year, a new design chief. Heidi O'Neill has now gotten a much bigger job. How do you judge the current executive team and predict whether they can sort of get back to a more competitive position in a more competitive market?
I think the way I'd phrase the answer is to say that there were strategic missteps that were taken in
oh boy, that's happening.
Focus, or the hard focus on direct to consumer and kind of shunning of the wholesale channel. It was bad. It was a mistake. It set the company.
Hey, just a heads up out there, we're having some server issues on the website right now. So if you're watching the show right now, the server, I think the front page is having issues. So just a heads up to you out there. It might be down for a few minutes. We'll let you know when it's back up.
Same way, I expect more product and conversations with the retail partners to push product back to wholesale. I think it's going to take time. What we've said is bulls have to be patient. At sub $100, you're kind of getting paid to wait, but that's kind of how I'd answer that, Sarah.
All right, thank you very much, Ike Borchow. It's true, they have admitted it. John Donahoe was very clear last night, not performing as well as their potential. We are getting some breaking news here out of Washington. Let's go back to Emily Wilkins on Capitol Hill. More drama, Emily.
Hey, Sarah. Well, I said that there were Republicans who were very upset with this past vote, and now one of them is taking the first steps to potentially oust House Speaker Mike Johnson. NBC is reporting now that Congresswoman Marjorie Taylor Greene has filed what is essentially the first step to remove Johnson. Now, we don't know exactly how this could pan out. You are still going to need a majority of the House to vote to remove Johnson, and there's still questions about exactly when that vote will be. We are expecting Congresswoman Greene to be coming to the floor soon and talking a little bit about that motion, but it's just really not clear at this point that there are the votes to pass. I think there's a lot of questions. There is frustration with Johnson at this point, but Republicans know if they spend another 3 weeks trying to find a speaker and being in that chaos, that is not going to bode well for them this coming November. Guys?
Here we go again, I guess. This is like deja vu, another showdown here over the spending bill. Thank you, Emily Wilkins. Keep us posted. As we head into the weekend, we have the S&P lower on what's been a pretty strong week, and Fed gave a green light.
Yes,
in the story.
Yep.
What are you watching next week? You're watching Vacation. David's out next week. I'll be watching PCE and GDP. That's it for us. Have a great weekend, everyone. Now over to Frank Holland and the halftime report.
All right, thanks very much, Sarah and David. Welcome to the halftime report. I am Frank Holland, in for the judge, Scott Wapner. Front and center this hour, riding the record rally as the Dow and the S&P, they get ready to close their best weeks of the year. The question now, how high can we go? Joining me now to answer this question and much, much more, today's investment committee, Joe Terranova, Liz Young, Jim Labenthal, all here at Post 9, Steve Weiss joining us remotely. First, let's get a quick check of the markets. Of course, we had those record closes yesterday. Now, markets under a bit of pressure. The Dow down just about 175 points. The S&P down fractionally. The NASDAQ holding on to just a few gains, up fractionally right now. And I think that's really where we have to start, Joe. Is this the beginning, possibly, of a pullback that so many people have started to become worried about, seeing the markets pull back, some type of correction? Or is this just simply a blip, a little bit of profit taking? It is a Friday, and maybe people just calling it a day.
Oh, Frank, I'm not going to go down that road again. I went down that road in early February, Jim, and I was wrong. I said I thought February was going to be a month in which markets corrected. So I'm not going to sit and predict a correction. Look, I think what is well known throughout the entire financial services.
Jimmy, I'm going to put NVIDIA's chart up for you, brother.
Clearly. Now, if a correction unfolds, I think the immediate investor reaction to that is to pivot into investment grade, high yield, emerging market debt. Why? Because if the correction on
Dirty Dogs trapped to AMD bulls in, you see that?
Surrounding the consumer names that we're seeing today, a little bit of a moderation in the consumer spending, and therefore I think you'll see Treasury yields begin to move lower. You get the price appreciation in taxable fixed income. I keep my eye on investment grade, emerging market, and high yield.
All right, so we're going to talk more about retail in just a bit, but there is a growing chorus of people calling for a correction. UBS today out with a note saying high chance of a minor correction. They say their aggregate tactical indicators.
You guys see the difference in NVDA and AMD? You see how NVDA price was below the hourly trigger and got rejected. NVDA tested its hourly trigger and is blasting off right now.
GDP growth optimism that causes that pull.
You guys see the difference in that? Do you guys see the difference in price above the hourly trigger and price below the hourly trigger?
This pullback that starts to feel much more dramatic because nobody was positioned for it. Happens in the opposite direction, too. It happened in 2023. Nobody was positioned for tech to run like it did. Even after the SVB thing happened, nobody was positioned for that rally. And then it was almost painful to watch it happen because we were all trying to figure out what was going on. A correction happens in the same way. So if everybody's on the side of this bull market will continue completely unencumbered, then yeah, a correction seems more likely. I mean, I think it's healthy. A modest pullback, let's call that somewhere between 5 and 10%, and be even more specific, let's say 7 to 8%, would give people a little entry point, a buying opportunity in some of those names. If risk appetite stays as strong and healthy as it's been, I think you see people come in as soon as a correction reaches that level and take it back up. At this point, there hasn't been data, there hasn't been news that would tell the market that a correction needs to turn into something more dramatic. Until that happens, I think it still kind of chugs along in a sideways fashion.
Yeah, we've certainly seen it seems to be all systems go after the Fed meeting and Jay Powell again saying there's going to be 3 rate cuts this year. Jim, I want to come over to you, the other side of the coin. Chris Harvey of Wells Fargo out with a new note. Upward bias likely to persist. He says the reiteration of monetary easing plans, despite expectations of a hotter macro backdrop, probably just ushered in a new wave of risk-on trading.
Well, look, I don't know Mr. Harvey's time frame, and certainly one can say, and I will say that I think there will be gains from here till year end. But I think that misses the point of what Joe and Liz are talking about, which is, and I agree with this, that a correction seems somewhat inevitable. Joe is wise not to try to pick the timing. I won't either. I think Liz comes up with some valid reasons for how a correction might unfold. But here's the most important thing, and I want to pause here. Folks, this is the most important thing about a correction. Don't you dare try to time it. Don't you dare think that you're smart enough to sell now because a correction's happening Monday and you're going to get back in 2 weeks later, with the market down 5 or 7%. I'm not trying to be insulting to anyone listening at home. I'm trying to be helpful. History is littered with professional and retail investors who have tried to time market corrections and find themselves in and out of the market at the absolute wrong time. And if you want to feel absolutely horrible about yourself as a person and an investor, try chasing a rising market when you're not invested. It feels terrible. It feels terrible. So I'm speaking demonstratively. Joe and Liz, and we'll get to Steve in a minute. They know. They agree.
Do we have to?
We actually do have to.
Look, a correction's going to happen, 5 to 7%.
I love you, Steve.
And you know what will probably happen? I'll make this comment. I don't even think we're going to get a full 10% correction. I think the rally over the last year and a half has people getting back into FOMO. I hear you on bonds. Still, I think when it goes down, FOMO is going to kick in on stocks, not bonds. That's my call.
All right, speaking about people listening at home, going to go over to Steve Weiss. Steve, you heard the different arguments here. What's your take on what we're seeing? Are we seeing possibly today a little bit of buyer's fatigue?
Actually, the only thing I recall hearing was Joe's comment. Look, we can talk about corrections and talk about how the VIX, every time it hits a new low or close to a new low, the market gets a little nervous and it sells off. And that, yes, over periods of time in the market, you do have corrections. This market seems to be more volatile in terms of single names and what the VIX is saying. But even if I told you there's going to be a correction of 5 to 10% on Wednesday, what are you going to do about it? Sure, a sophisticated investor may go out, may short the Qs, may short, the S&P, may buy puts, whatever. But what are you going to do? Are you going to sell your stocks that generally have big gains if you've been investing in the market and pay those taxes for a decline of 5 to 10%? So what I would advise is stay the course. Stay in the names that fundamentally look attractive. If they don't look attractive at the levels they're at now, then sell them and look to put it somewhere else. But to try and time a correction, as Jim points out, it's sort of ludicrous because there's nothing you're going to do about it anyway. So the market trend is going to be up. Yeah, we can try and read the tea leaves, like what's the put-call ratio? Is this survey too bullish, et cetera, et cetera. But at the end of the day, that stuff is just noise, just gives us something to talk about in CNBC. And whereas the reality of running money is that's not how you manage it.
No, those are great thoughts from Steve. And if we could, can we throw up a chart of NVIDIA? Because I would be very surprised if the market was going to have a correction and NVIDIA would do what it's doing today. Look at NVIDIA, 941 as we speak. This is the highest level since we had that reversal on Friday, March 8th from the 975 level. So I don't know. I'm hard-pressed to believe that a significant correction unfolds with semiconductors higher on the day and NVIDIA looking like it wants to go challenge the all-time high.
You guys really are kind of having a conversation right now. Weiss, you recently bought more NVIDIA, right?
I did. I mean, on one day, right after Jensen Huang spoke at that long conference, at that long presentation speech, rather, the stock traded off in the afternoon. That traded up meaningfully in front of it. And when I say meaningfully, let's not forget, you're talking about 20 points on an $800, $900 stock. So on a percentage basis, it's nothing. But then it traded down. I think traded down about 34% the next day. I took that opportunity to buy a little bit. Unfortunately, it recovered so quickly I didn't get much. So it's still a relatively small position. But again, you've got to take what the market gives you and not try to press it. So I'm happy with my positioning. I still have cash overall in the market, and I'm there to buy other sales.
All right, speaking of positioning, a member of the investment committee is putting some portfolio protection. Bill Baruch's the founder and president of Blue Line Capital. Bill, you were just here with us yesterday. You jumped on a plane and you started getting concerned about a pullback, it looks like.
Yeah, I think everybody can agree, and everybody's really said this just now, there's some exhaustion in the market. Now, we just got out of the Fed meeting, and I like how Mike Santoli said it yesterday, that the market had this afterglow. And I think it had some good follow-through, but it's very rare to see a big move up like we had post-Fed that then follows through and stays up there. I expect a little bit of volatility. The market did take on the whole narrative from the Fed as leaving the 3 dots there, but we may see a little bit of hawkish tone when these Fed speakers begin to talk in the coming weeks. So I'm just taking a cautious approach, really just starting here right now with 0.5% of the entire portfolio. I bought SPY puts. These are the end of month May 500 strike. and it gives me a little bit of a cushion if this thing starts to pull back. I like to start it here. And the important thing is, Jim just said it, Steve just said it, it's very hard to time a correction. And I don't want to time a correction and sell your stocks. And so I start with a little bit of a cushion here. It's my way to really navigate what we could see in the coming weeks or months.
So, Bill, I know you say you can't time a correction. I think that's the consensus right here. But you are looking at some things in the currency market that are leading you to make this downside protection move right now. The dollar up just about 3% year to date, up about 0.5% since the Fed meeting. Why is that so concerning to you?
The dollar has a very inverse correlation to the equity market. And coming out of the Fed meeting, we've seen dollar strength in the last 2 days. Now, a lot of that, it's about what is the dollar getting paired against. So we've seen the Japanese yen weaken to new lows, even after hiking against the dollar. We've seen the euro pretty heavy here in recent trading. The British pound has taken a leg lower after their meeting yesterday. The Chinese yuan got pretty unhinged last night. If there is going to be some ripples through the currency market, you better believe it's going to be showing here in the S&P with a little bit of a pullback at minimum.
All right, Bill Baruch with some downside protection. Bill, thank you very much. I want to toss it back to you guys.
Frank, can I just add one thing?
Yeah, Weiss, of course.
Frank, can I just add one thing? So we're basically an information vacuum. We've got some economic data coming out next week, but then we get into earnings. And so Bill's protection is going to take him through at least the beginning of the earnings season, probably not the heart of it. And if you see a catalyst for the downside, that's where it's going to become apparent. I personally don't think that's going to be it. Companies have gotten a lot smarter about guiding, so I think we'll be fine. But that potentially is the catalyst to take it down.
All right, so Weiss says earnings season could be a catalyst. Joe, I see you nodding.
Could be. Look, the expectation for calendar Q1 2024 earnings is that you'll see growth of 3.5%. That's down. That's been revised lower since the beginning of the year, where the estimate was coming in at 5.7%. Profit margins look still to be strong at around 11.5%. So I think we're in a good place in earnings. I feel as though the worst has passed. We went through the earnings recession from Q4 of 2022 through Q2 of 2023. The NASDAQ was the first index to come out of it. The S&P followed. The Russell still technically in an earnings recession. But I think from an earnings perspective, we're in a decent enough place where margins are the story. They're strong enough to give investors confidence to continue to be allocating in that direction.
Yeah, I'm gonna tease ahead to that retail conversation. We'll be talking margins in that retail conversation coming up. But Liz, I want to come over to you. We've seen recent outperformance of value over growth. Do you see that changing? Is now the time to allocate towards growth?
Well, first of all, to follow up on the earnings conversation, I think that the first quarter reports, as long as nothing bad happens, as long as there aren't any big disappointments, I don't think it's going to be that big of a deal. It's expected to be the most muted quarter of earnings growth for the whole year at 3.5%, as Joe mentioned. You look at the other quarters, Q2, 9%, Q3 at 8.7%, Q4, 14.2%. Right. If we can pull that off, that's a reason to get more bullish as the year goes on. I think Q1 might actually be kind of a nothing burger, really, so to speak. So back to the conversation about value and what's happened in the last month or so, it's all about a rotation. We came into the year feeling like some of these trades, the growth trades, were already overcrowded. Then they got even more overcrowded and continued to go on. And investors who are in those names, I think rightfully have stayed in those names, but it was very difficult to convince yourself that it was a good entry point. So then money that is looking for a place to go is naturally going to look at the places that are undervalued, or at least relatively undervalued to things that have run up so much. And add to that surprisingly strong GDP numbers and a Fed that says we don't need to cut because everything is pretty good, labor market's still strong, and you see this resurgence of the cyclical trade. Cyclicals are inherently value sectors. So I think a lot of it has to do with a rotation. One of the things that's important that I think people should pay attention to is that the rally as we came into the year, when you look at small caps and the run-up in small caps, a lot of that was originally driven by small cap growth, which is not usually the behavior that happens mid-cycle-ish. You want to see small cap value add to that. And now we're seeing small cap value start to take part. I think that's a good sign for risk appetite.
Can I jump in on
what you just one quick, to Liz's point, actually, over the last month, energy, the best performing sector, up 7%, followed by materials and industrial. So those cyclical names starting to show some leadership. Jim, over to you.
So Well said. Rotation. And when I hear that word rotation, what I wonder is this just sentiment driven or is it something fundamentally based? I think people who watch the show, and certainly my colleagues to the right of me, know that I am at heart a value investor. And I've been preaching for quite some time, for basically 2 years, that these stocks, financials, industrials, materials, energies, are undervalued, that there are fundamental reasons to own them. As we go into this first quarter earnings seasons, folks, what I'm questioning is whether this rotation is just a fad, if it's just sentiment, if people got tired with the Mag 7 and so now they're going to try on the cyclicals, the value stocks, or if there will be real legs to it. Now, I happen to believe, and with every stock, I don't care whether it's Citigroup or General Motors or Qualcomm, I put forth the analytical reason for why I think the fundamental basis is there. But the question still lingers. Is this rotation just sentiment driven? Is it a fad? Or is there fundamental basis? And I'm looking, Liz, to the first quarter to get some support on the fundamental call that I'm making. That General Motors is selling a lot of cars and they've got it at a good profit level. That Citigroup is cutting back expenses and sees enough growth that it can buy back its shares meaningfully. I mean, I can go down a long list through the sectors we're talking about, financials, industrials, energy, materials, but the first quarter is a proving ground.
So you're saying it's a proving ground. I want to go back to your argument. I know you said you're leaning on the fundamentals. Let's go to the sentiment. Isn't a lot of this sentiment based on the idea that we're going to get rate cuts this year, probably 3? I was speaking to the chief investment strategist of KKR, Paula Campbell Roberts. She was saying their thesis is even after the Fed meeting that there's only going to be 2 rate cuts. How important is the actual number of the rate cuts to the sentiment and part of this rally that we're seeing?
Yeah, I'm going to say what we all know. It depends on what the reason for the rate cuts are. And remember, we walked into this year with the market expecting 6 rate cuts. We all on the desk knew. Every single one of us said, listen, if you're getting 6 rate cuts, that's not good for the stock market. That's because the economy's in the tank. And I can make the counter argument that, what if we get 2? What if we get none, right? Torsten Sloke at Apollo is one of the most vociferous in saying that maybe we get no rate cuts this year.
Right.
Well, that would be on the back of, presumably, better economic growth. We can't rule out stagflation. Of course, we can't rule that out. But it's conceivable that you get no rate cuts or 2 rate cuts because the economy is going gangbusters. And you know it should do well in that environment? Not just cyclicals, but the small caps that Liz mentioned. Now, small caps, and I see Frank smiling. I don't know if we can see that on camera. Small caps are laboring right now under the presumption, and it's valid, that their financing costs are too high. So that's something we've got to fight against. But if the economy is going gangbusters, that might be enough to power the small caps through those higher financing costs.
A lot of calls about small caps rallying this year. I think Tom Lee says they're going to be up 50% this year. I didn't look at them recently, but I think for the year they're up maybe 3%. I mean, so a 47% gain.
2.5%.
2.5%. A 47%, 46%, whatever it is, gain for the rest of the year. I mean, it seems unlikely. But, I mean, tell me if I'm wrong, Liz. I mean, even with 3 cuts, does that seem like a likely scenario from this point on to see small caps go up more than 40%?
No, that doesn't seem likely really in any calendar year, but stuff that hasn't happened before happens all the time. So Tom could end up being right. That seems like a lot to me, even coming from somebody who loves it when small caps outperform. But what we need from the economy is to really figure out where we are in the cycle. And anybody who watches this show or other shows that I'm on is tired of hearing me say that. But I continue to think that there is a huge debate between, are we early to mid-cycle expansion, or are we late cycle euphoria? And to Jim's point, if there isn't fundamental strength that backs up some of this rotation, we're late cycle euphoria, and that's that. The issue here is that this cycle is becoming one of the longest that we've ever experienced, and we're starting to hit new records. We've got now the longest yield curve inversion ever. If the Fed makes it to the November meeting without cutting, it'll be the longest pause between the last hike and the first cut. So we continue to make these new records. We're actually at a point where we're knocking on the doorstep of the longest period of time when the S&P hasn't had a 2% correction in a day. So this cycle is just elongated further and further, and that could be the thing that eventually, if it does turn, we'll be like, oh, see, we were late cycle. But this argument rages on.
If you really believe that if small cap's going to rally, then regional banks are the obvious proxy for that, and you just buy the regional banks.
In all fairness, regional banks are outperforming since the Fed meeting. Small sample size, just a few days, but they are outperforming. We do want to get to something that definitely is working right now. We're going to hit our chart of the day. It's FedEx. Shares hitting a new record high after beating earnings and announcing a $5 billion share buyback. I'm not going to say this report was a surprise, but there was a lot of hand-wringing. I'm going to do some hand-wringing for the people watching on mute. A lot of consternation about this one. Jim, you're laughing. What were your expectations? How surprised are you about FedEx doing this well today?
Well, look, I'm happy. I mean, I'm happy to the conversation we're just having, right? You want FedEx to do well if you're bullish on cyclicals. And the hand-wringing, I was laughing because that's the right approach, right? People have learned to be disappointed in FedEx over the last several years. So it's understandable that there was hand-wringing. Look, it's a good report. I'm not in the stock, folks. But certainly you want to see a company like this do well.
So you want to see it do well. Steve Weiss, is it doing a bit too well? I mean, it missed on revenue. It did beat on EPS. A lot of it was hinging on the Express results. They beat on margin, revenue in line, but still it's declining revenue in that business.
Yeah, let's take this two ways. I mean, the stock is doing well, and that's separate from the company doing well. So Jim's view is that you want to see it do well. I'd rather see the fundamentals do better than they are. You still have down revenues. You still have negative, year-over-year comparisons in the majority of their businesses, I believe. So the fact the stock is trading up as it is, based on a bottom line beat and a top line miss, and albeit some good guidance on the bottom line, means that it's a margin story. It's not an economic growth story. So I just think that these parabolic moves are not great for the market, and that's eventually what might cook it. I mean, to have stocks moving up and down 20% on one earnings report that really don't go and destroy or significantly buttress the fundamentals, what kind of sense does that make? The answer is it doesn't make any sense.
One question for you, though, Steve. I mean, isn't this a sign that their cost-cutting efforts, their transformation efforts, the results that we saw, while they weren't amazing, the fact that they were able to lift the bottom end of guidance, isn't that a sign, and the share buyback as well, isn't that a sign that that's working? This is a company that is a pretty good read on the economy in many ways.
Yeah, Steve.
Yep. Yeah, but there again, it's the margins. It's they're cutting costs. It's not growing the business. It's not growing the packages. And if you take a look at last quarter, which was a really bad quarter, right, in terms of the market reaction, all we've done is recover that loss. So that's what I mean about the volatility in the stock price. So look, you've got a relatively new CEO there. He's been there for basically a drink of water. Give him some time to get the cost base straight, and then we'll see if volumes pick up. So they have to add back to it, or will they be caught short? So that's really the mystery here. The stock's not compellingly cheap, by the way, at this multiple. Sure, it's a discount to the market, but that's where it should be for this kind of cyclical stock.
Cost efficiency only goes so far. I mean, this company is not Meta, where they have Instagram and other levers of growth to pull. The company can affect cost efficiency in a buyback, but thereafter you need to see organic growth within the company.
All right, FedEx shares still hitting a new high, up over 7% right now. Up next, the state of retail. Lululemon and Nike under some pressure. Cordy Reagan breaks it all down, and the committee debates the space. Halftime back in just 2 minutes.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Insurance.
We're back on Halftime Report. Retail under some pressure. Big drops for both Lululemon and Nike. Senior retail reporter Courtney Reagan is following the moves. Courtney.
Hi, Frank. Good to see you. So Lululemon put up a strong holiday quarter with strong sales and expanding margins, but it's really being overshadowed by that forward-looking guidance. On the top of the earnings call, though, CEO Calvin McDonald said, quote, there has been a shift in U.S. consumer behavior of late, and we're navigating what has been a slower start to the year in this market. Now, most analysts look at the stock price weakness for Lulu as a buying opportunity here, and they're looking at the guidance as conservative. They're not overly concerned about Lululemon losing share to competitors like Alo or Vuori and some of the other upstarts. Nike, too, though, outperformed for the quarter and issued disappointing guidance. Nike's been going through a turnaround effort for some time. We know that, leaving analysts mixed on near-term expectations. Executives now talking, though, less about being targeted on their direct-to-consumer selling and more channel agnostic, which actually includes leaning in with some of those wholesale partners. So the Nike story might be a little bit different from Lululemon, but we haven't really heard any weakness or potential weakness from Lululemon in quite some time, which might be a little bit of a shock to the street and part of the reason, again, for that downward pressure today.
Yeah, a lot of downward pressure, especially for Lululemon, just looking shares down double digits. Courtney, thank you very much. Joe, going to come over to you. You own Lululemon in the Joe T ETF. What's your thoughts about the quarter, and then about the thoughts about some of the speculation that, you know, the high-end consumer may be getting tired, maybe getting worn out right now?
I think you have to try and simplify this conversation the best you possibly can if you own Lululemon and, by the way, extension, if you own Nike, because you have to be careful being very complicated and saying, okay, this is a larger read-through on the overall state of the consumer. Yes, from a fundamental standpoint, you have the first quarter for Lululemon where you sit back and say, okay, I've got some disappointment. I've got some disappointment because they delivered on the earnings, but they really didn't deliver in terms of what their guidance might be. They see something that they're somewhat concerned about. Should that make me concerned? I'll say this, okay? This is a company that has in the past disappointed in that regard and quickly recovered. So be very careful dismissing the ability of Lululemon not to recover quickly. With that being said, technically, you've got a breakdown here. The stock is below the 200-day moving average. You have to acknowledge that. In the case of Nike, you kind of have a little bit of the opposite, where the technical condition was already negative to begin with, and then you get the fundamental story. So how do you resolve all of that? You look at Lululemon, you say to yourself, okay, technically I've got a little bit of a breakdown. Okay. Fundamentally, I see something in the future that will resolve itself. Where's positioning? Always go back to positioning. And positioning in Lululemon right now, it's pretty long. I think it's well understood that speculators are long Lululemon right now, and I think that portends a little bit of further weakness in the near term.
So, Weiss, you got a take on Lululemon as well?
Yeah, first of all, it's such a great idea to keep Jim out of any block that concerns fashion. Look, in terms of Lululemon, expectations are very high. The stock's still expensive, although I'm looking at it, I'd like to buy it. They have a unique brand there, and they do have pretty much a lock in the market. You've got Alo, but it's not the same. Lulu's much broader. But Nike specifically, this is more interesting to me. This is another sign that the Chinese population, the consumer, is having sort of their day of reckoning with U.S. brands. So if you take a look, Tesla's down, Nike's down. You can talk to others that are down. That's a real issue, and I think it's just the beginning of it. So what went from everybody's got to be in China, everybody's got to be in China, to where the big growth is, to now the reverse. The Chinese government is supporting local brands and unsupporting, maligning U.S. brands. So I don't know how they get out of that.
All right, well, Nike shares down 7%. We've got to leave the conversation there. It's time now for the headlines with Bertha Coombs. Bertha, good afternoon. Good to see you.
Hey, Frank. Russia has warned the European Union that there could be, quote, catastrophic consequences should the EU continue its plan to seize frozen Russian assets held in Western banks. It comes after the EU agreed to move ahead on a proposal to take up to $3.2 billion a year of revenues from those assets to supply arms to Ukraine. State Farm is dropping coverage for more than 70,000 homes and apartments in California starting this summer. The move comes after the insurance giants announced that it would not write any new policies in the state. State Farm is the largest insurer in California. It cites soaring costs, the increasing risk of catastrophes like wildfires, and outdated regulations as reasons for not renewing coverage and remaining a good neighbor, I guess. Tennessee, the home of country music capital Nashville, just passed a new law to protect people in the music industry from artificial intelligence. The law, called the Elvis Act, will ensure AI tools cannot replicate an artist's voice without consent. The first in the nation state law takes effect on July 1st. Makes sense that it would be Nashville. Back over to you, Frank.
Bertha, thank you very much. Have a great weekend. All right, coming up next, Dom Chu details the best sector this week, and the committee debates how to play it. Halftime returns right after this. And we're back on halftime. Communication Services is on the move. Our Dom Chu is standing by with today's Sectornomics. Dom.
So, Frank, we're talking about the fifth biggest sector in the S&P 500, which is communication services. It's roughly about 9% of the weighting in the S&P. But if you take a look at the forward valuations from a price to earnings perspective right now, we are trading just about in line with where the sector normally trades, at least on average over the past 3 years. According to data from statistics and analytics firm Wide Charts, we currently trade at just around 17.5 times forward earnings. That's just about bang in line with where it's been over the last 3 years. Now, if you take a look at some of the stocks that are trading at the deepest discounts or premiums to their respective valuations on that same 3-year basis, that Wide Charts data shows something interesting with regard to where we are seeing some of those biggest discrepancies. If you take a look at this, for instance, take a look at some of the stocks now that trade at the biggest premium or discount. if you look at those, and I'll try to bring them up right now, on the communication services side, on the forward PE basis, if you look at the discounts there, Match Group on the last 3 years trades at about 32 times earnings. It's currently trading at around 10 times, so a deeper 68% discount. Paramount Global, 24 times earnings on average, 9 times is where it's at right now. And then T-Mobile at 27 times earnings on an average basis, trading at 14 times. So some of the bigger discounts. And on the flip side, some of the ones trading more in line or at premiums to their valuation. Check out Meta Platforms, currently trading at about an 8% premium to its 3-year valuation versus Omnicom and AT&T, which are pretty much in line where they've been historically. So for the past 3 years, those are some of the biggest discrepancies from a valuation standpoint. Frank, I'll send things back over to you.
All right, Dom Chu with this month's Sectornomics. Dom, thank you very much. We're going to stick with communication services. Meta is the best performing stock in this sector year to date and over the past year. Joe, you own this one.
Yeah, obviously Meta is a core holding in communication services. Overall, in the quality momentum strategy and the JOTI ETF tracks it, that we have 6 names in the communication services sector itself. Trade Desk, ticker symbol TTD, is also a name that's doing well, and Live Nation is another name that we maintain ownership in doing well. Of course, Alphabet, we're there also. And then we've got some exposure to Electronic Arts.
Right. As Don was hitting on communication services, the best performing sector year to date. Liz, I want to bounce this off you. Brian Belsky of BMO, friend of Halftime, put out a note today saying that high profile names, that outperformance is going to subside. It's going to be other parts of the market. I mean, it sounds like he's talking about this month's Sectornomics with Meta being a strong performer, the entire sector being a strong performer. Do you see communication services not fading, but losing leadership going forward?
Well, I actually agree with Belsky. I mean, he's usually quite bullish, and I've been more cautious, but love Belsky, and I'm with him on this one. But I think it's already happening. That high-profile names have sort of come out of the forefront. If you look at the market by factors and you look at what drove the market from October through the end of last year, that momentum factor was the strongest driver. And then this year, it's sort of turned around. So momentum no longer the strongest driver. Things like quality, low volatility are driving. So you're naturally going to see other names come into the forefront. I think Meta is an example of something that has continued to be in the forefront. So that one may be more of an exception, not the rule. But I do think that as we go forward and as the rotation continues, whether fundamentally driven or not, you will see some of these names that have not been talked about start to become more popular.
All right, one name that's been talked about quite a bit, Netflix, heading for its 6th straight month of gains. Why should you own this one?
Yeah, not enough. You never own enough of the ones that go up. Look, Netflix is, I think I said in the show Wednesday or Monday, is the winner. You've got companies like Amazon with their Prime, which is clearly cut back under Jassy on the content. Then you've got the others, the standalone services that are attached to, when I say standalone, I mean they're attached to a studio or something like Disney or Paramount. And they're cutting back because the balance sheet's upside down. It's expensive to run an online service, streaming service. So Nike's got the best pricing power, and as prices continue to go up, we've seen them all raise it, you're gonna have to make choices. So guess which one you're not gonna give up? Netflix. So it looks a little stretched in the valuation performance because analysts are jumping over themselves to raise the price targets as they are in the market, as they are in NVIDIA, as they are in anything that works. But I'm staying there for now because ultimately it is the winner.
All right, Netflix shares higher today, doubling over the last year. All right, coming up next, Mike Santoli joins us right here post 9 with his midday word. As the major averages, they're tracking for a winning week. Much more halftime coming back right after this.
Feds.com.
And we're back on halftime. As you can see, the Dow down more than 200 points. Senior markets commentator Mike Santoli joins us with his midday word. Mike, give us a sense. What are we seeing right now?
I think we're seeing kind of a well-deserved rest. The market is kind of stepping back and kind of observing its work and likes what it sees. I think the big question, we kind of got all you would have wanted out of the three major known catalysts this week, the Fed, the NVIDIA, Palooza, and all the rest of it. And now it's kind of, everyone knows, kind of fully valued market. Everyone's embraced a soft landing scenario. Field position-wise, market's acting really well. It was very broad, a lot of new highs yesterday. This question is where the next source of energy might come from and in which direction. So I think that's where we are. Next week, we get this PC inflation number. It's at the end of the week.
Right.
So the market is kind of in this mode of it's been a lot of gains in the first quarter of the year, and how does that set us up for the next little bit? I do sense a little bit of rebalancing out of equities into fixed income. That's only around the edges, but it makes sense here.
I want to focus on equities just for a minute, a little bit tongue-in-cheek. What do you think about small caps? You mentioned every day on Worldwide Exchange, people come on, they say it's the year for small caps, the year for small caps. Tom Lee notably saying they're going to rise 50% this year. We were just talking, they're up under 3% so far.
Yeah, I mean, I don't assign any special powers to small caps in terms of telling us what the economy's doing or anything like that. I did run the math, though, on Tom Lee's call. If we go up 50% in the Russell 2000 this year, at the end of this year, the 5-year return for the Russell would be like 12% annualized. My point is, that's just mean reversion. That's just getting you back to kind of a normal spot if we're in a bull market. So I'm not saying it's plausible or likely. My point is there is catch-up to be had under the right circumstances, but it's also okay to ignore what they're doing if the rest of the market is okay.
Mike, I know you have an alarm clock. We might have to book you for a bull-bear debate, you and Tom Lee on Worldwide Exchange. All right, coming up here on halftime, though, streaking stocks, a handful of names in Joe's portfolio on some big runs. The committee debates these winners. That's coming up next. More halftime right after this break. And we are back on halftime. Energy, the best performing S&P sector this month so far. Let's hit some energy stock streaks. Joe, you own Diamondback, which is trying for its 14th straight day of gains. We're going to start right there. Energy, do you see this leadership continuing?
First of all, I'm very fearful of this segment because we're identifying stocks that are on a significant winning streak, which means you know what's coming next. It's going to be a losing streak. Mean reversion always happens. In the case of Diamondback, this is a company that recently announced a $26 billion acquisition, Endeavor. It strengthens their position in the Permian. It also positions them to defend against remaining independent. This is one of, in my opinion, the strongest fundamental energy companies that you could own. I would advise the viewers on any pullback to add to the ownership of ticker symbol FANG. It's had a very strong performance year to date. Buy it on a correction for sure.
Right. I don't want to jinx you. I want to talk about another stock held in the JOT ETF, Valero, trying for its 13th straight day of gains.
Valero up significantly year to date, up 31%. That rivals Marathon Petroleum, which is up equally that amount. And Marathon Petroleum over the last year is actually up more than that. Both those names are owned in the JOT ETF. Fundamentally, gasoline is the strongest product of the energy complex so far year to date and over the last 3 months, and that's driving a lot of the performance. Technically overbought, I will absolutely acknowledge that. From a sentiment and position perspective, the analyst community on both Valero and MPC have price targets that are well below current price, and that's looking 12 months out. So the street is suspicious about the rally that we've witnessed here. The only negative aspect of this, as I said, is these stocks are technically overbought.
All right, you got a couple other winners in industrials, WW Grainger and also Quanta Services.
Quanta Services, that has exposure to utilities, consumer and electrical spending, excuse me, and that remains strong. They have very strong pricing power. WW Grainger, they are just basically everywhere in the industrial space. Again, strong balance sheet, quality company, finally built up some strong momentum in the last year.
These are individual stocks, but Liz, we've been talking about these sectors showing leadership over the last month or so.
Yeah, I mean, look, energy had a tough 2023, especially compared to what happened in all the other sectors. And you've seen this steady climb higher in oil prices this year. Also, if you look at energy stocks and you're playing this rotation into cyclicals, energy is the poster child for that right now if you're expecting demand to go up. And we've got energy stocks that pay a pretty healthy dividend in some places. So on the heels of we finished the hiking cycle, expecting cuts at some point perhaps this year, dividend stocks might be the place to be. You want to get into them before those cuts come closer into view.
All right, coming up, we have another winner, Aerospace soaring to new heights. How the committee is playing it, that's coming up next on Halftime.
To me, a change maker is someone who sees an opportunity to make things better. I've also been told that for real change, you have to accept that it doesn't have to be perfect, but don't let perfection be the enemy of the good. And I remind myself that life is fleeting, and when you get the chance to affect change, you should move with real urgency.
All right, we're back on halftime. Take a look at another big winner today. It's the ETF that tracks aerospace and defense, hitting a fresh all-time high led by gains in Boeing. Jim, I'm going to come over to you on this one. Again, hitting an all-time high led by Boeing today.
Yeah, I mean, Boeing's not hitting an all-time high. And I don't like the words that are about to come out of my mouth, but this is how I feel.
Don't say it.
No, I got to be truthful here. I mean, I think Boeing's got a very long-term big problem here, and I would not touch the stock here. I sold it the Monday after the Alaska Airlines fiasco. I mean, there's talk that it's up today because major airline executives are going to talk to the board of directors at Boeing. What on earth is that going to do? There's talk that maybe Calhoun's going to leave.
Get rid of Calhoun. That's what's going to do.
Weiss, calm down.
Get rid of Calhoun.
All right, wait, just hold on, Weiss. There's no need to interrupt there, okay? I'm making a point. Calhoun's not the problem. He's not the solution. Neither was Condit. Neither was Stonecipher, all right? There's a long list of CEOs who have not turned around the culture that got decimated by the McDonnell Douglas acquisition in the last century, okay? These are not the guys who can go down to the production line and put the bolts on the air plug that blew out in the Alaska Airlines fiasco. And by the way, the FAA is no friend of Boeing right now. I mean, after many years of all this, they're going to be slow-walking any production increases. They're going to be slow-walking any new model certifications. Production's going down. Cash flows, profits are going to be crimped by all of this. Sorry, I don't like anything that I'm saying, but it's just how I feel.
All right, well, I think we might as well just leave it there. Boeing shares are up 1% right now. Stay with us. Final trades, they're coming up on halftime.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
This one's free.
All right, time for final trades here on halftime. Weiss, you are up first.
Yeah, so I just bought a little Boeing because I heard Jimmy's emotional outburst. And the bottom line is, culture starts at the top. And Calhoun has been the culture carrier here for well over a decade from when he was chair of the board and a board member. And so I better not hear Jimmy ever talk about a CEO of Cliffs or anything, because apparently he doesn't make the steel. So I think it's a great trade here. They're going on the road to get rid of Calhoun.
Jim, you're up next. We got to get this show on the road.
Yeah, Pacific Gas and Electric, a little defensive play if we're all talking about corrections.
Liz?
A commodity ETF that also has almost 50% in treasuries as a yield kicker, so you get both sides of the coin.
Seems as though NVIDIA is finally comfortable with price above 925. Here we go, March to 1,000.
All right, that's going to do it for Halftime Report. The exchange starts right now.
Frank, thank you very much. Welcome to The Exchange. I'm Tyler Mathisen in for Kelly Evans. Here's what's ahead. Not a bubble, but bubbly. That's how one of our guests describes today's market. But that doesn't mean you can't still find some bargains. He's looking for them. We'll tell you where. Plus, shares of Tesla down more than 30% this year so far. Should you buy the dip or steer clear as the EV winter continues? And Elizabeth Warren once again goes after the company. And it's been a big week for the builder stocks, but our analyst brings a surprise name not in that sector that he calls a stealth housing play. He joins us ahead. We got a mystery chart, but we begin with today's markets and Dom Chu with the numbers. Hey, Dom.
All right, it's a little bit mixed, but modestly so after coming off record days for all the indices earlier this week, especially just yesterday in that big surge that we saw in the markets. The Dow Industrial is currently down about 182 points. That's off 0.5%, relatively flat for the S&P 500. It's currently sitting at 5238, down about 3 points. At the highs of the session, we were only up about 3 points, maybe down 12 points at the low. So again, a pullback from those record high levels, but again, modestly so at this point. The NASDAQ Composite, the tech-heavier index, 16,435, outperforming up 33 points. That's up about 0.25%. The reason why we want to highlight that NASDAQ trade is because it has been the stellar one. All three of the major indices on a one-week basis are up roughly 2.25 to nearly 2.75% overall. The sectors that are leading the way higher are communication services and technology. So that kind of magnificent seven trade, alongside industrials, all up between 2.5% and 3.5%. Meanwhile, the underperformer has been on the interest rate sensitive side, XLRE, the real estate side of things, down about 1% over the last week. That's your state of play on this Friday. But the stock that a lot of focus has been on has been kind of a tale of two different types of narratives in just the last week. For Apple shares, we started the week off on a fairly positive note with some of that news reports, especially from Bloomberg, that said that it could be possibly teaming up with Alphabet's Google to offer Gemini AI, the Alphabet side of things, the AI platform, on future iPhones. That gave a boost, and then all of a sudden the Department of Justice came out with their antitrust suit against them, taking it down. And remember, yesterday's session when we were down big, shaved about $113 billion in market cap off of Apple in just one day. And Tyler, we like to give you some perspective. $113 billion is like shaving roughly the entire market cap of Boeing off of Apple's market cap in just one day alone. I'll send things back over.
Gives you a sense of scale there, Dom. Thanks very much. With the major averages on a weekly winning streak and Dow 40,000 on the horizon, should investors pop the bubbly or be worried about the market being too bubbly? One of my next guests says we will pull back. He also says we will see Dow 100,000, and he's been around for a few market milestones like this one, Dow 10K in March of 1990. Look at that youthful man there. He even put it on a baseball cap, and he hasn't aged a day. For more, let's bring in CNBC contributor Michael Farr, president and CEO of Farr Miller in Washington, along with Michael Cugino, permanent portfolio family of funds president. A pair of Michaels today. Michael Farr, let me begin with you. You say that the market is bubbly, but not in a bubble. What's the distinction there?
Bubble is one of those runaway things, Tyler. And if you forget the names of the guests today, you're in real trouble with the two Michaels here. That's a test, Tyler. You know, so we've seen elevation, and have we really gotten to the point where we're seeing a bubble form in AI? Every time we've seen these bubbles, we've had a whole lot of leverage in the market. Kind of runs counter to the idea that there's $7 trillion in money market right now. So we're looking for leverage. Prices feel inflated, but they don't feel ridiculous. And everybody's not on the same side of the bullish boat. That's always another bad sign. So I think we're moving that way, but not there quite yet. Reason to be worried, but not overly so.
How do you see it, Michael Cugino? Not ridiculous, but fully priced. Where are you on that spectrum?
Yeah, not only do we have the same name, but we probably have a similar viewpoint. Certainly stocks are elevated, but not unnecessarily so, given the macro story. The Fed is likely done. They just came out saying they're probably going to cut. Corporate earnings have held up. There's a lot of liquidity on the sidelines. People are working and spending. It's hard to see a negative. It's almost a perfect storm for equities to continue to bleed up right now. There are some headwinds out there, but the impact of those are being way overweighted by the positives at the moment.
So, Michael, you say that we'll probably pierce 40,000 at some point, probably have a correction at some point here, a pullback, and eventually motor forward up to 100,000. I want you to give me the date and time that we're going to be at 100,000.
I mean, it's in your inbox, Tyler.
Okay.
Just take a look for that. You know, when you take a look at where we are, this is math and the rule of 72 and compounding. So if the market doubles every 10 years, 15 years from now, we ought to be at 100,000. That's it. That's just the math. If we do 7.5% return on the Dow Jones Industrial Average. So I think 40,000 is on the way here. Clearly doesn't look like it's going to happen today. Next week would not be a surprise. It's not going to be that important in terms of the percentage change of your portfolio, but it's really important in that it is a great vindication and a great endorsement of the American economy, of capitalism in general, that this is the place that is the shining city on the hill where capital formation can happen, where property laws and contract laws are regarded and respected, and the American dream happens here. Every time we hit one of these levels, we all ought to put flags out in front of our houses and celebrate. This is why you watch CNBC. You understand that really the heart of America and our economy and economic growth is what keeps the American dream alive. CNBC covers it every day.
Michael Cugino, I remember, as probably you do, when the Dow was at 1,000, not anywhere near 40,000, and that sounded like hysteria. So you're on drugs. What are you smoking crack here? What do you say in terms of how I ought to position my portfolio? Now, I know you're a big believer in diversification and diversifying beyond merely stocks and bonds.
Yeah, I mean, I also remember Dow 36,000 when we were somewhere in the teens. So we're definitely going to continue to trend up over the years, but who knows how long that takes. I think psychologically, it's a psychological factor too. And, amen with what Michael's saying. Mm-hmm. But in terms of, how you want to position a portfolio, there are other asset classes that people need to be considering in terms of a broader comprehensive definition of wealth. That would include bonds. It would include U.S. and non-U.S. securities, stocks and bonds. It would include commodities, real estate, precious metals, et cetera. All of these things impact the economy at some level, and a properly diversified investor, even growth investors, need some offsets or some balance to a portfolio, at least for a portion of their capital. And so we would advocate, even if you feel very strongly about the stock market, there likely will be corrections or pullbacks. There could be a period where it doesn't do much, or given your liquidity needs or age or whatever, you may need more balance, more diversification, less volatility, but still getting a return. And so we would advocate for diversification as well.
Let me finish with you, Michael Farr, if I might. You say, and I think it's a telling and important point, that time and not timing is what generates wealth in the equity markets. I couldn't agree with you more. That's the lesson that you were just pointing to there. But timing does matter, doesn't it? At least at the margins, because when you buy and when you sell, if you sell, is what determines your ultimate return.
No question, Tyler. So having a discipline is really, really important. And remembering the other fundamental rule, which is buy low and sell high. When markets are making new all-time highs, you've got to be very careful about your buying, and you have to be even more careful about your owning. Complacency is the greatest risk now. We haven't really had a bear market in quite a while. We did have a blip at the beginning of COVID, but it was short-lived, and people haven't felt pain in a while. And people say, oh, the risk is fine. Oh, I can have more risk exposure. Oh, this is going to work out. I can hold through. You haven't seen your portfolio down 20% in a long time. Make sure that you're following your discipline and that you're trimming some of these equity positions that are getting too big, where risk is creeping into your portfolio. Don't be a victim of complacency. Be a devotee of that long-term goal that you set when you started to invest. You're going to get there. Stick with it. Don't be emotional.
All right. The two Michaels, thank you very much. Have a great weekend, gentlemen. Appreciate it.
Thanks, Tyler.
Thanks. All right, you got it. All right, let's turn to another part of the market, and that's the Reddit IPO. Shares dipping below their opening price of $47, now back above it at $47.83, hovering a little shy of 48. The stock closed up 48% from its IPO price of $34 a share yesterday, climbing as high as 70% before blowing off a little steam. Kathy was ARK Invest buying into the social media company, scooping up nearly 10,000 shares of Reddit on its first day of trading, but there are plenty of challenges in store. Julia Borston was on the floor of the New York Stock Exchange for yesterday's IPO, joins us now. What are the challenges ahead for Reddit? But number one is how to make money.
Well, yeah, so this company has yet to turn an annual profit. Last year reported the loss of about $90 million. But Steve Huffman, the CEO of Reddit, told us that in the back half of the year, they did show profitability. And he's outlining a plan to use AI to make their ads better targeted, more efficient for their ad buyers, and also to license their data to the likes of Google to generate new licensing revenue to train the Google AI systems. So one big question here in terms of the challenges is what the FTC does. They're investigating Reddit's data licensing practices. Now, Reddit says this isn't a problem, but analysts are watching this as a key area because they need to make sure that they really can indeed continue to license this data in order to create this new revenue
Is the
stream.
path to profitability here really goes through the advertising business, right? I mean, it's an advertising-driven
95% of their
company.
revenue now, 95% of the revenue is from advertising, and they're competing when it comes to advertising, not only with the likes of Snap and Pinterest, but also with Meta. And Meta is so much larger. Meta and Google are the digital duopoly here. We're seeing the rise of players like Amazon when it comes to digital advertising. Reddit has this challenge of competing with much larger players. What they say is that they have a very much unduplicated user base, meaning that advertisers can reach people on Reddit who they can't necessarily find on the likes of a Snap, Pinterest, or Facebook. So we'll see how that plays out. And then they also say that a lot of people come to Reddit with intent to buy. People might be asking questions on Reddit about what kind of car should I buy, what kind of electric toothbrush. And so it's a place to reach people when they're open to information about purchases. But that's going to be a key thing to watch here. And then as we watch revenue growth rates for all of these players, we're going to be very carefully watching their revenue growth rate for an indication of how much they're able to continue to convert advertisers.
Who were some of the biggest, I don't mean to catch you off guard with this, but who were some of the biggest shareholders that made money yesterday? I know that the founding family of Condé.
All right, here I go. I'm back again. Happy fucking Friday. We're heading into the 1:12 o'clock, 1:12 in the afternoon hour. Coming into the half an hour trigger. Go right back here. Break time. Be right back.
But through that process, bought
Get the old man out of here.
which is part of Condé Nast, has
Slide that over right there.
They originally invested.
We are going up. You guys got that post right there. We are trading higher into the 30-minute trigger. PT1 is right here at 522.07. Your next target above is 522.28, and then we've got one more target just above it.
Not by targeting individual.
Right here. Please give me my 526 in the day.
Targeting.
Come on, baby. Give me my 526.
Groups and kicking them out to make it a less toxic.
I think I said 524 or 526. Can't remember.
Information and positive content. You don't want to have any.
Let's see if we got it right. Here's one of them, 523.
Advertisers don't.
Pretty big stretch for us to get up there. Let's take a look at it and see.
Really empowered their moderators.
Yeah, right. I think we'd fail like right here.
Such important work on Reddit to pull out stuff that.
Right here is where I thought we'd fail today, like right there. So let's go look back and look at it.
With more tools to make sure they're keeping the content on Reddit fair.
I look forward to next.
We actually go up there, I'll be stoked. I don't think we do. We are turning up right now.
I'm looking forward to it.
It seems a little late in the day. You see, it's like 1:13 in the afternoon. It's actually a good hour to go up right now.
Stores or
but it's a little late to the party, isn't it? It's not like we're doing this at 9 a.m.
Up next, we will look at
we're going up
trends and whether they are heading us toward a productivity boom.
Hang tight 1 second here.
And speaking of tech, Apple coming off its.
I don't think we get up here unless they do a creepy crawly up the Wally, maybe. It's possible, but I like the structure though. 1, 2, 3, 4-ish. I think I might take a trade here in just a minute. I was like, maybe I won't take a trade today, but I think I might be. I wish I had taken this trade here. I was busy, but this trade was gorgeous right here. This trade was absolutely stunning right here. Bam, straight back down. Bam, straight back down. Bam, bam. And now basing to go higher. Let's see where the pivots are today. Yeah, so we even have this up here, 522.74 right here. That's the pivot point. R1 is 523.57. We only got one more day. We have vol starting on Monday in the morning. $524s are, make sure I get this right here. Hold on a second here. Tasty has not been nice to me lately. $0.17 for 523s. They're saying we're not getting there. I'm going to wait and see here. I want to see. Their dealers are saying, no, we're not going up there. I have a trade set up right now for 523C. If I can get a tag down here on this 1 minute trigger. So I'm going to take a trade with you guys. I should have jumped in the trade. I didn't take it. I wanted a pullback here. I wanted to catch at least one back test. I wanted something like that, like a just a little liquidation break and then straight up. So I missed this trade. I'm not on any trade right now. Are you guys still long right now or no? Should I just slam it? It's only up a penny right now. See if I can catch a fill here. Hell yeah, it's fucking Friday, baby. We only got one more day, right? We got today, and then I think we got a little bit on Monday, and then it's volatility it starts, so. Then we got volatility. I hate volatility. Oh, I'm not on this trade, by the way. I have an order in, but it didn't fucking fill. This sucks. It's only up a couple pennies. It's about 3 pennies right now. It was at 17 now. Then it was at 20 for a second. Hell yeah, free money Friday. I love Free Money Fridays. This looks like Free Money Friday, doesn't it? Let's see what we can see above here. Let's see what we can see. We kind of tagged that one. Kind of. It's a little short. I guess we could call that done. Oh, yeah. Give it to me. Oh, yeah. Give it to me. Give me a liquidation break. Give me like one more penny. One more penny. Two more pennies. Give me 2 more pennies. Come right down here. Give me like 15 cents. 15, baby. Give me a liquidation break. Oh, yeah. I got 14 cents in now. I need 3 more pennies. Give me 3 more pennies down. IWM trying to break above 2 right now. Or not IWM, Q's trying to break above right now. I just need 2 more pennies. Are they going to try to test the 5-minute trigger maybe? Whoop. All right, I'm in for 15 cents. I'm on 523. I hope this doesn't continue down a little bit more like this. Hits the 5-minute, then comes back up. 15 cents. I got some calls with you. We'll see what happens today. I'm down. We'll see what happens here. I got some calls. So that trade is dead. Slide that over a little bit. Let's see if we can get up here and trade it. Dealers are saying no. Dealers are saying, fuck you, buddy. We're going to be trapped in this box. See that box up there? Box is gnarly. Look at that thing. Box is hideous. Like ping, pong, ping, pong, ping. I'm hoping that we get like this kind of a thing right here, like a dragon's tail, couple legs. It's Friday. We'll waste some money. We'll see what happens. Put the head up here. That's the body right there. Or if it's just a Friday trap. I'm going to hold these into the close. Every time I say that, they go to 0. So I'm going to hold these fucking things right until like 4 o'clock in the afternoon. I'm not selling them for anyone. Diamond hands all the way to 4 p.m. Did I have to sit here all day long until 1:30 to even get a trade? I'm up a couple pennies here. That's pretty good. I'm happy. Reddit's going down again. They've got a bear cross. They had a bull cross, then a bear cross on the 1 and 5 minute trigger. They're now trading underneath the half-hour trigger at below 48.95. I will say this: if you're a Reddit trader, what do you think about the weekend? Do you think that people get panicked and start selling? Do you think they'll be like, it's the weekend, I'm going to take money and run, and I'll come back on Monday? Yeah, dealers can pry them from my cold, dead fingers. Oh, yeah, baby. Woohoo! Get on up there. Trading 18 and 19 right now. We're going to get a blast up here. Watch out for, well, not really watch out, but we got that little thing right there. We got that little thing right there. And we got a blast off up here, baby. Ooh, yeah. Give me that rip. Give it to me. This one's gone now. Bam. Get rid of that one. This one is gone now. Bam. Get rid of that one. Got that bad boy right there. If I could make fucking 100% trade right here today, I'm going to be stoked. No sleep, laser beam eyes. Oh, you guys want some kaput? What's going on with Tesla? I haven't looked. Hold on a second. I'll bring Tesla up. Is Elon all messed up right now? Let's check Tesla and see. Check it on a 30-minute trigger. Tesla could explode to the upside. If you're a Tesla bull, you're likely looking at a squeeze up to at least 182, but likely even higher. Tesla's likely done going down here. If anybody's told you that Tesla's, has anybody told you that Tesla's not going up? They're wrong. Tesla will trade 212 likely. All this shit with Tesla right now is just bullshit. It is going down to the depths of hell, but it's bullshit in terms of where price is headed. So, or it is not bullshit, but it came up from its minus 100 on its daily trigger. Still has a little bit more rounding to go here on its daily velocity, but it's just noise. This is what you get when you don't. This is what happens when you don't think it's going back up. You just get your fucking face ripped off right here, and they just fuck you sideways. So Tesla's going up, no matter what anybody says. All this noise right here that happened, bullshit. All that. This is all bullshit in here. This is all like scam right here, scam right here. I'm very bullish on Tesla. So, well, I'm not long-term bullish on Tesla. But all this noise right here, I don't want to hear any of it. So I'm bullish on Tesla. Bullish, kind of bullish. Trade 19 and 20 right now on SPY. I'll leave Tesla up here for you. I think I forgot to put Tesla up the past few days. Let me check the hourly trigger. Whoa. Check the hourly trigger really quick. Yeah, hourly's ready to go too. If you're a Tesla bull, you're likely going to trade 182 today before the end of the day. Fair chance of it. Pretty good chance of it. One in 5 minute trigger coming up underneath the half an hour trigger on SPY. No. I'm over here trying to get some work done, and you can't hear me right now? I'm like, like this right here is making me mad. I'm over here doing a bunch of work, and I'm not paying attention to my trade. I'm not going to look at it. I'm going to close the laptop. They're grinding my balls right now on my calls. I'm still up right now, but I want to push, man. I want a straight push up. Like I want like this right here. I want this one right here. I just want like boom, boom. I don't think I'm going to get it. I'm going to try to roll us down to the 5-minute here. We haven't tested the 5-minute either. No test of the 5-minute yet. I'm going to have to add to this position. They're fucking me now. 13 cents, dude. Oh. Oh, I got to buy more. You already know what I'm doing. Will they grind this shit in? If they bring this shit down here and bring it down here, I'll buy more. Bring it down there. I'll buy some more. We're going to do this on a Friday. Fuck it. Let's do it on a Friday. Bull feels good. I am going to load the boat. Fuck these guys. They want to make 10-cent calls. I'll do it. I'll take them 10 cents. I think I know what's happening here. I think what they're going to do is they're going to burn the entire fucking chain. If I had to guess, that's what they're going to do. I tried to get them close to in the money. I mean, they were only one strike away. I'm like, yeah, they're one strike. What are they going to do? Send those to zero? Maybe. That's what I think's going to happen here. I'm looking at the chain, and I'm looking at the chain, and one strike away I bought at 15, but I'm like they were like 17, 19 cents. I'm like, you're one or two strikes away, I guess, from in the money at that price. I'm like, that looks like they're going to torch these options. Both sides. They're going to murder the puts. They're going to murder the calls. Thank you for playing. Appreciate it. See you on Monday. Now, there is some arbitrage there sometimes, right? They'll make it seem like it's not going to pay, and then end of the day, they ramp or they dump. I don't know where that is going to go in today. This looks more like take all the money and run. Like, take all the Bears money, take the like, if you're a bull, you should be out, which, of course, we are. We're out. But, there might be a little bit of arbitrage in there into the end of the day. So, and like, Q's is looking great. AMD now is looking good. They're blasting up into their hourly trigger, right? Trying to climb back up. And their velocity looks like shit, so they're going back up here, too. The market is supportive, right? Market is supportive. SPX, I mean, this is beautiful. Let's look at SPX right here. I mean, SPX looks fucking great. Look at it, right? Come down, leave a little bit of the gap down below. We talked about that, right? It's got a gorgeous, I mean, this is all like natural, right? Look how beautiful that is. A little bit of bull flag right there. Start cranking it up. Even if we fail up here and roll this down into Monday, see that, right? All that consolidation. See all that consolidation forming? So I'm on the bull side here. I am 100% on the bull side. Reddit, I don't know about Reddit. My thought on Reddit is that it's going to bleed out to the close. Maybe you rebuy it. I'm not positive there. Apple looks good. Looks better than AMD, definitely. Definitely looks better than AMD. SoFi, this shit's going to take this is going to take a couple weeks. You're early, but it's still good. I still like it. And actually, they did bleed down here. Do you see that? They did bleed down. Not enough, though. I want it to bleed down like down here. NVDA blasting up right now. It's got a little bit more room to run. Tiny bit more. It's got another little leg or two. A little bit of leg up there to go. Maybe hit that red bar up top. Q's just begging. Like, look at Q's. Q's is like, I'm just begging to go up. Q's is like, just let me rip up here and just blast up into the bell. We'll come back next week, start trading this, and we'll start poking our heads up into 453, 455. All that. We've done this before. How many times have we done this before, right? We make a blast up. We make a leg up. Bam. Wait a minute here. Make a blast up. What do? Rip up. Come in here. Consolidate. Rip up again. Come back down there. Consolidate. Rip up again. Everyone's like, that's a bear flag. And then we just fucking straight push it up. So nothing's changed at this point. So I'm long as fuck here into this close. I want to see him tell me that I'm lying. I'm going to call them on their bullshit right now. I want to see what... I don't believe them. I don't believe the Bears. There we go, making money again. Get your ass back up there, Spoos. You're lucky you didn't come down here. I would have bought all that shit, too. Let's go. Move it. 1:45 in the afternoon. Vol control. Let's do it. Yeah, there it is right there. Give me that one right there. Push that shit over. Pull that one down here so it looks nice and sexy. Get up there and fucking touch it. Oh, yeah, we're going to fuck the... Oh, I shouldn't say that. But the Bears don't know what's... Oh, look at... All right, how about this? We got the CaptainJimJames, right, with Trade the Trigger. You got Captain Jim James to trade the trigger. And then you got the old Captain Jim James, right? We have to have like a Dr. Jekyll and Mr. Hyde moments around here. It's Friday. We can talk, right? I should get a beer, shouldn't I? It's fucking Friday. So we have to come up with like an alter ego. Maybe I'll get a mask or something. You'll have like the official Captain Jim James. And then you'll have like what Captain Jim James thinks. You want to know what Captain Jim James thinks? You're going to get fucking run over. You're going to get run over today. You're going to get run over tomorrow. You're going to get run over next week. You're going to get run over the week after that. You're going to get run the fuck over, right? We're going to hit 530. We're going to pull back. We're not going to correction. We're going to pull back, consolidate. We are going to fucking rip faces off. Rip faces off to 35 and 3600. By the time we're done to get that correction right this summer, we'll get that correction, but they're going to rip your fucking faces off. This is no holds barred. It is not done. It ain't going to be done until late this year or even springtime of next year. I'm telling you. Right now, the way everything looks, it reminds me of like every bubble we've ever had. Reminds me of 2020. And you guys remember 2020, right? You know when people jumped in 2020? September. The banks didn't jump in. That's a fact. The banks didn't jump in until September of 2020. They just kept telling you no, 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 and then they finally got in. That's why we kept going up. People don't realize that. We kept going up because the banks got in late. We are so fucking early right now, it's not even funny. We're in March. We have 9 more months of this. Big pullback in there, but 9 more months. Minimum. We ain't near done yet. No, that's not the official Captain Jim James. That's the traders. That's the unofficial company man. They hate when I play the music. Hold on a second. They hate when I play the bear music. The bears will tell me I have to. They're like, "What are you doing, bro? It's not your music." They get mad at me. Oh yeah, fucking pay me. One more thing, as we go up here and blast up here, right? You're going to get one more pull down, so we're going to sell that, take the money. Then we're going to come back down and buy this shit again and run it really high up. So give me a second here. As we come up here, take some money off. Oh, yeah, I got a sell order for 22 cents. Give me one more penny. Oh, you fuckers. I'm still in. I'm not out. Just let it go? Should I just let it go? Fuck it. I'll leave it on 25 cents. I believe, baby. 25 cents. Let's do this. Fucking bulls own this market. Fucking bears can't get it done. Give me a squeeze, baby. Say it louder, Uncle JBJ. New high of the day. Say it louder, Uncle JBJ. Everybody say new high of the day. Got back in the stream just the right time, didn't I? What did I tell you earlier? Where are we going? We're going up, baby. Up, up. Trading 24.25, baby! Give me the money! Woo! I'm out. Now trading 27 cents. They were as low as 15 cents. Are we making money out there or not? Go on Twitter and say we're making money with Captain Jim James today. Who are you making money with, baby? Woo! Watch out for a back test in the 1 minute trigger here. You will see either some consolidation on this yellow line or a straight drop down to the white line, the 1MT, and then a blast up here. We're looking for a next target, 523, baby. You guys want to see it? You guys want to see? You guys want to see it? Hold on a second here. You guys want to see it?
I think the girls with their nails done now. Girls with their nails done. I think the girls with their nails done.
Are we off the charts right now? Where are we? Here, I'm gonna ask you on Twitter right now. Here, I just asked the question. There we go. Let's see what you guys are doing down there. What's that? What does that say?
I think the girls with their nails done now. Girls with their nails done. I think the girls with their nails done. Girls with their
Oh, yeah, that was good. I like that. We stole that song from the Bears, didn't we? They're so mad right now. Let's take a look over here. Let's take a look at a couple things. Let's take a quick look here, okay? It's now 1:58 in the afternoon. Watch out there. We do have some VIX rolling down right now. We've got Tesla recovering right now. We got NASDAQ still limping. We got Dixie falling right now. What happens when Dixie goes down? What happens when VIX goes down? Tell me out there in the chat what happens when the VIX falls and the Dixie falls. What happens to the spoos? Hold on, we got to do a different song here. Nah, not that one. Nah, not that one either. Kind of like that one. That's some bullshit, isn't it? Some bull music. Yeah, I don't know if I like that one. I don't know if I like that song. I don't like that song. I don't like that song. You know what song I like? What song I really like? I like this song. David AMS, if you're out there, I love you, brother. If you're alive right now, if you're awake. Second, I'm gonna pause this for a minute. I want you to see something here, okay? What can I erase here? All right, so see this right here? I'm just gonna delete that. I want you to see something. You've got the initial push up right here, right? Bam. Come back down, and we have a 3 trigger cluster here. And this bigger move here. So I'm going to make this like big here. Do you see that trade right there? So you might want to take your money. They might come back down. We got a 3 trigger bull cluster here. 1, 2, 3. 2.5. It may not go down that far. It could go down like here to get up there. But anywhere like here, down here, if I had to guess, the worst it should go down is about that half hour right there. So I'm going to change that to oh, dude, I love you guys. I fucking do. Show up no matter what. Show up no matter what's with you guys. Fucking no matter what. There we go. Right there. So you can see it better. Let's get back to what we were doing, right? You should try the dope. Now that I got my dope, I'm finally ABJ, I see you out there.
Oh, I'm finally ready to dance.
They're not even pulling it back. They're just going to blast it straight up now. 523 is now trading 28 cents, 27 cents. MSFT short squeezing. Woo! Well, be careful here. Hold on here. I got something for you. Mute that really quick. Just heads up here. There is a trap for bulls. God dang it. Oh. I didn't see it until just now. Right here. Hold on a second here. Where's that sneaky little thing? Whoa, 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 whoa. Where's that sneaky little thing? It's sneaky. Oh, yeah, it's a big one, too. March 24th at 1531. March 24th at 1531. I got that wrong. Hold on, March 21st. March 21st. Oh, whoa, whoa, whoa. Right there. We're perfect. We're golden. We're golden. We're golden. We're golden. We're golden. We got this right. We did it right. This is going to be your red bar. We did it right. We had it right. Woo. I was scared there for a minute. We got it right. We got it right. We got it totally right. Whew. We're good. We're back in business again. Hold on. We're back in business again. So there's a right here. I just want to make sure I got that right. Right in here. There's a little bit of a gamma wall right above us here. So you could probably take the money and run here, or you're gonna need the help of the half an hour trigger to get us up there. But even if you do, they're waiting. They're not the big they're not the big bears, but they're pretty big. There's a bear up here. He is there is a bear here. He's hiding out. He's right here. He's right there. So you're going to need, like, there is something to be said here. Now, there's two things here. Let's go back. Oh, hold on a minute here. It's 206, right? There's a little, like, squeezy thing going on over here. Like, do you see this half an hour trigger? Like, there. And there's, like, this bullshit up here. And then there's the creepy crawly up the wally right there. So be careful of this here not being true just at the moment, and then, like, the grind to get there, and then boom, it goes up. And the only reason that I'm saying that is because there's an asshole right here, and you're not going to block him off until about 340. Once he takes the hedge off, we're free to roam up there. So you might, I mean, we could do it right now, but just be aware that as we come up here, there's a stinky bear here. He has to take the hedge off, and it's for us to move up higher. So Just be careful that this potentially could be here. You know, some kind of nonsense like this. Hold on, I'm doing this wrong again. Could be some nonsense going on in here. That's not really the best looking crap, though. Some kind of nonsense like that. I will say this to you, that you need to know that trend is dead right under here. This is all your trend right here. As long as these buyers stay here, we'll push and push, 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 and sneak it up. Still a good run, though, for right now. Still a great run for right now. Nothing bad about this run at all. We'll leave that over there for now and see what happens here. And we got a cross coming right here. We got this like 5 minute and half an hour cross. They always like to touch that shit. They're like, oh yeah, we're going to go back here and make sure you're still there. Let me go up there and up there. Let's see what happens here if they just squeeze it up or if they push it up into the close. Well, that would piss some people off, wouldn't it? Just run it right up into the close. I don't know who that is. That's something Bork did. I'll have to ask Bork who that is. I don't know who that is. We'll see how this plays out. This could take a little bit to get up there. They grind all of the options out, and then boom, they do the last minute arbitrage. Look at let's look at Qs are just sneaking up too around here too. I can't read everything you guys are saying. It's not the Soto response person, is it? I don't know. I don't know who it is. I saw the picture and I was like, I don't know who that is. I couldn't recognize him. Oh yeah, Jimmy Barry's like, I got money to burn today. I make so much fucking money this week. We also have a Fed speaker at 4 p.m., don't we? Yeah, so you don't want to look at QQQs. You want to look at NDX? I love NDX, dude. I don't like looking. So when I used to trade Qs, I only traded it with the NDX chart on. Never with the QQQ chart on. For some reason, I couldn't wrap my head around the Qs. The NDX ran slower for me and more refined. I always felt like I was going level to level, and once we were starting towards a level, I was like, oh, we're going that way. There's no way. Do any of you feel like that about NDX, or is it just me? I felt like it was always like a zone-to-zone trade where like Qs kind of looked sloppy to me. Am I the only person that likes like trading Qs using the NDX chart, I guess, would be my question. I feel like the chart for NDX, I don't know why it looks like that to me, but it did. No shit. Is that why? Yeah, I could interpret the chart easier. AMD trying to recover right now. They're like, fuck you. We're not going down nowhere. I will say something here. I was pretty bearish here on AMD this morning, and they are proving me wrong right now. They are above the half an hour and the hour trigger, and they are back testing it right now. If they hold that, whoo, watch out to the upside. Should we get back to playing music? Somebody said that they didn't like the music. There was like a meth head. That's like that's house music, right? Deep house. You guys know what deep house music is? It's like go to a place and a bunch of hot people dancing. I'm like, yeah, I'm gonna hang out. You know what I used to do? If you're a young man out there, right? If you're a young guy out there, you know, I used to pick up hot women. This is so terrible. I used to like to go to raves and stuff, right? But I always wanted to pick up hot women. I was like, where are all the hot women at? I was always like, it's like, I want to meet hot women, like super hot, like model hot. You go to a gay club. If you go to a gay club, there are always hot model chicks hanging out there. I don't know why that is. I don't know if it's still the case. But even here in Detroit, that's where I go, and there's like hot women everywhere. So if you don't like this music, you better get to like it. I'm serious. Yeah, they like to party, man. They like to party, and they attract, for some reason, they attract super hot women. Hot women all the time, like super hot. And if you're a nice guy, they'll talk to you. Like, if you're not like some bro or whatever, some like Andrew Tate or something, like, dude, you can talk to girls all night long. Oh, yeah. No. Totally. Less competition. If you're like an easy guy to get along with, hang out in gay bars. Yeah, they don't want guys all over them. They don't want guys like fucking trying to like meathead them all night long and stuff. Oh, totally, dude. I go to Burning Man and I'm like, Burning Man's freaking crazy, you know? Come on, man. Get up there. Come on, Spoos. It's a life lesson for you if you're a young guy. Stop that Andrew Tate shit. That shit's all wrong. That guy doesn't know what he's talking about. That shit's all bullshit, man. Like, don't do that. Like that Andrew Tate stuff is like all that like pickup artist shit's all bullshit. All that like macho man shit. Women like you're friendly, you're nice, conversation, do fun shit. I just met a guy here in Detroit, and I met this guy in Detroit, and he's like I don't know how to meet women, and I was like there's so many women here in Detroit. I was like, stop trying to pick them up. I'm like, like every guys try to pick women up all day long. They don't give a fuck about you and your weightlifting and your salad hair and all that other stupid shit you do. They want to do shit with you. They want to like go ski and hike and bike, and they want you to volunteer and like pick up trash. They want you to read a book with them. All that cool shit. You do all that shit, women will fall all over you. Like you go to like a nice dance or something like that. You go to like a nice like after hours club or a rave or something like that. You just focus on having a good time, and you'll attract them. You don't need to be some fucking retard acting all bra. That's right. Act like your best self. You do that, man, you'll get girls all day long. They come find you. They're like, that guy over there. You guys ever go out sometimes, like with the wrong people, and you see the right people, and you're like, see those fucking people over there? They're having a great time. You're like, those people like to have fun, and that's what you attract, right? If you're out there you don't care what people are doing. You're like, I'm here to dance. I'm here to, I don't know, do whatever it is that you're doing. It doesn't matter what it is. I'm here to bike ride. I'm here to run a race. Whatever it is, if you're having a good time, you're attracting chicks all day long. It's true. I don't know why it is. I don't know what it is about it. I think that's why married guys attract women, is because you're not interested. You're just like off doing your own thing. That's what I notice about married guys. They just don't care. They're like, I'm doing my own thing. I'm not here to get laid or try to pick a woman up or something like that. I feel the same way even for my guy friends. You know what I mean? Like, so one of my best friends here in Detroit, I got a guy friend here in Detroit I've become very close with. He's a very close friend of mine. And he said it to me recently. He's like, you know why I like you? I'm like, why? He's like, you don't care. He's like, you're here to have fun. He's like, and I'm tired of like sitting around with my bro friends that don't have girlfriends and they're all broing it up and all that. He's like, I just want to go out and have a good time. And I'm like, all right, let's do it. Let's go out. Yeah, come on down there. So you got to, I want you to notice this too. Do you see how when you get a cross like this, I'm going to move this over. Now there's two things going on here, okay? Before we get all crazy and stuff, there's some mechanics going on here. Notice how price is attracted to crossing triggers. See how the triggers are coming up here? These are called clusters. And we've got one coming up right now. You got another one coming up right here, and they're all kind of meeting right here. When that happens, you'll see volatility in price. And so you'll actually see the volatility in price, and you'll even see like aggressive moves down, testing to make sure that's real. Now I try to simplify this stuff. You don't need to understand why. You just need to understand that it happens. And the most powerful part of understanding that it happens is what is the reaction if it's successful. And so what normally happens is whenever this could be upside down or right side up, doesn't matter. But whenever price is coming down into a cluster, if the cluster is successful, the result is usually violent in the opposite direction, whether this is upside down or not. So just be aware of that. And as time passes, when you're, let's say you're above or below the 1 minute, they'll always come back and check the 1 minute, come back and check the 1 minute, and then come back and check the 5 minute. If this thing holds on the half an hour trigger, it'll rip faces off. Now, if it doesn't hold, right, we can check to see if it will or won't hold. So let's take a peek right now and see. And my favorite way to check velocity is on the 30 minute. So this is beautiful right here. It's not great, but it's good. And it's coming from negative velocity to positive. I want to see that half an hour just give a good push up. The hourly velocity kind of sucks. The daily velocity is building. That's good. So on the daily, we're bullish. If you combine that with, like, if we were negative hourly velocity right now, and we were negative this velocity and this velocity, a 15-minute velocity, 15, 30 in the hourly, it would be explosive. Now, it's not quite explosive right now, but it is slightly supportive on the 30-minute trigger. So let's take a peek at it. So I could probably pause it to myself here. That as long as the 30-minute trigger holds, we are going up. And also that the 30-minute trigger should hold because of velocity, because it's coming up from negativity on a half an hour basis, right? So I'm thinking here that this is going to hold, though it might not be explosive until the end of the day over here, or it could even peter out over here because we don't have the kick-ass hourly velocity. And you can actually tell. See how the hourly velocity is not, or see how the hourly trigger is not aggressive? It's kind of hanging out, right? We don't have, look at the difference here. Do you see, hold on, let me show you this. This is important information that you guys need to be able to see. Do you see how you have the aggressiveness of the hourly trigger just moving? And right now you don't have that, do you? Kind of puttering around. It took all this beating down here. Bam, bam, bam. So do I think that the hourly is going to propel price up? Probably not at this moment. Supportive, but it's not awesome sauce. So we're going to check this right now and see if this half an hour trigger can hold. I'm going to slide that over just so you can see it. Let's see if it holds right now or not. And I'll say this. If the half an hour trigger does not hold, I'm not too confident in an explosive move up into the rest of the day. I would expect if this breaks here, right, like literally breaks and sends us down here, I'm going to think that we're going to do this into the end of the day. So we're going to watch this and see what happens, see if this is correct or not. Hold on. I can't buy here. Hold on. Dude, I'm still having problems with Tasty. All right, I got another trade set up here. 523s, they're 10 cents right now. Oh shit, I should have bought them. Hold on. I didn't buy them. Now they're 12 and 13 cents. Like, do you think they just grind the fuck out of these things? I'm also watching this right here. You see this? Trying to sneak this down. Trying to reverse this down here. Let's move that to the side. I want to watch this price action. Keep my eyes on this. I'm also going to be looking at, hold on. I'm also looking at 522s. Like I said, I missed the trade right here. So I'm hoping that I can get a quick rip like that. See if they'll give it to me down here. Nope, they're going to leave me behind, I think. They're going to leave me behind. I should have fucking grabbed that. I should have grabbed that minute bar right there. I tried to select the strike and it wouldn't let me. $2:26 in the afternoon. Almost to the half an hour. Four more minutes left. Bulls winning the half so far. Tesla fighting its way back now, trading 171.27. Does anybody think you can get to 180? If they get to 180, I'm going to laugh my ass off. There's a big giant squeeze in the end of the day on Tesla. SPOO's now trading 522.37. Fuck, I wish I grabbed that, dude. These are not, the calls right here are now up 50%. If you bought that tick right here, they're already up 50% right now. This is going to be a 100% trade right here. You might get something like this, something like that, something like that. If you jumped in that trade, congratulations. That's a great trade right there. Now, this right here is a sexy-ass trade. It's a fucking gorgeous trade right there. I missed the trade. Oh, that's a beautiful trade right there. 5-minute cluster, half-hour trigger. Trigger looks great. It's a beautiful fucking trade right there. Absolutely fucking stunning. Take the money before you get here. It's a great, great fucking trade. We put some music up. If you're in that trade, I'm gonna play you some music. This one also goes out to David AMS. If you're out there still, if you're listening in, I want to say thank you for everything you did this week. Trader Podcast, if you're out there this week, I want to say thank you for everything you did this week. Joe Donut, if you whatever you did this week. Bork, baby. Stay strong, Bork. Mr. Talking Monkey. Binky, if you're out there. Herrera Low. Jimmy Berry. Oh, yeah, you guys are here. I love you, David AMS. That's my friend out there. That's a fucking great trade. Oh! Sam trading it for 11 cents to 22 cents. Andrea's trading it. Reddit with a 3 trigger cluster right now. Long on 16 cents on 523C. I just missed an ad. I tried to add just now and I missed it. I tried to grab a penny there. Oh, I'm in. I'm good. I'm good. I'm good. I'm good. Now be careful. They keep trying to trap you in here, right? I just took 10, then added another 10. And I'm sitting here watching this, and I just want to make sure I don't get trapped in here with a double, and then wham, take you down, boom, and then back up. So just keep your eye on that. Still long here. Look at HYG look at HYG. HYG wants to wreck it right now. Dixie looks like it wants to roll down. Tesla pumping. NASDAQ looks beefy right now. AMD wants to squeeze up into the bell right now. Apple's looking to squeeze into the bell. Apple breaking above 172.87. You might have a squeeze coming up here in just a few minutes. Apple right now trying to squeeze. Trading 172.87. If they can get above, they will try to close the gap at 177. Whew. 176.08 at minimum. What's this one? Yeah, I see that Apple's trying to squeeze right now. Tech wants to explode. Dixie's about to roll over right now. Get out of the way. HYG's about to rip faces off. Hold on, let me get you out of the way there, Mr. Bear. Move you over a little bit. Get out of the way, Mr. Bear. Get out of the way. Get out of my way, Mr. Bear. Somebody get the gas pump. Let me bring over the fuel pump. Put some gas in there for you. Let me fill it up for the rocket ship. Let me put the rocket legs on the rocket ship. Put a little thing like that over there. Set that bad boy up. We're going to put a little rocket ship window over here. We're going to give it some wings. We're going to put a ladder on it so we can climb up in there. And what are we going to do? We're going to drive our little car over there as we start to blast up. It's our little electric car. Little funky looking electric car. We're gonna draw. Oh, you don't like the spaceship? Hold on, I got one for you. We'll draw it like this. How about like that? Does that work for you? Like that, or that way, something like that. I don't know how that goes. Better like that, maybe. Look at the Qs right now. wants to pump. Look at those buyers down there on the 30-minute, just pushing, pushing, pushing. Let's check out the gamma, or not the gamma, what are you doing over here? See what's happening over here. Let's go to the book map and see what's going on. That looks like they want to trap it. Oh, what's that up there? Oh, yeah. Oh. Ooh. It's just begging to go up there, isn't it? What do we got? 1 day left? Oh, yeah. Look at that up there. Look at how saucy it is. Just begging, isn't it? It's like, come on up here. I'm right up there. Just look at how close I am, yet so far away. Ooh. Ooh. I might have to add some more here. Hold on a second. They're setting up a rocket ship here. I think I'm gonna add some more down here. Right down here. I'm gonna add some right here. They can get me right here. I'm gonna add some. Give me a rocket ship. Bob in the basement's like, I can't take the hedge off until 340. It's only 241. There's a rocket ship setting up here. So I'm going to try to buy this right here. I'm going to buy some right here. And I'm going to buy some right down there. There's a rocket ship setting up here. By the way, Reddit is about to explode to the upside as well. Tesla's trying to rocket ship up to the upside as well. NVDA has some stuff to clear out on the upside. Sofi is trying to fight its way. Apple looks like it wants to explode to the upside as well. SPX floundering a little bit right now. I think it's more a question of it's more a question of dealers trying to get cheap options and put this stuff in the money without paying anybody. So just hang tight for a minute. There we go, dropping it down right now. Like, I feel like I want to buy the 49-cent calls, but I don't want to spend that much money. So I'm either going to buy the 49-cent calls for dirt cheap. Nah, fuck it. All right, so I just bought 11-cent calls. Even if these things burn, I don't care. I'll just add the next strike higher if we do blast down here, and I'll just DCA it. Watch me get blooded down here. If I see anything like this here, if I see anything fail here, I'll sell them and come back. I'll sell. If that happens, I'll wait and buy them down here. So I want to see this green bar right now go up, up. I need to see a push. So this candle's important here. Let me show you this. Watch this. See that candle, that candle? This is very important structure here. I don't want to see weakness in this candle. This is showing me that there's well, I already know why. There's a seller here trying his best to get this down to a price that they want, that a buyer wants to pay. So they're trying to push this down right now. Let's see how this half-hour trigger holds. We need this half-hour trigger to hold, in my view. So let's see what happens here. Watch them try to push this down right now. And I'm in calls here. I bought calls right on that, right there in that red bar. Watch this. We'll see how they try to push price down. They want price right here. They want price right here. I don't want price right here. I want price to stay in this half-an-hour trigger. The half-hour trigger is strong, so I don't want to be buying shit down here. I will, but I just don't want to. This is a strong trigger right now. This half-hour trigger right now is pretty strong. Well, it's a weak trigger. It's not a strong trigger, but for what it is, it's very strong right now. Yeah, that's right. Hold that shit. Hold that shit. Now, here's the big part. Is this right here. This you shall not pass shit. I need green bars up here. Bam, bam, bam. Let's pay close attention here. 2:46, 14 minutes until power hour. Come on, Bulls. Did I hear an echo? Echo. I wonder if it's my voice maybe because it's so gone. And I want to show you this right here too. I'm going to watch this right here. Right there. Yeah, you're not taking my stops out. You're not faking me out, bro. Sorry. No. You're not faking me out. You're not faking me out, dude. He's going to try right now. Well, maybe they are going to take me out. Uh-oh. Uh-oh. Well, they're trying, dude. They're pissy. Mr. Stinky Pants, Bob in the basement right now. His tight underwear is all like matted and like gross, and his glasses are all disheveled. He's got tape all over his glasses. He's hammering the sell button. He's got like rings around his collar and shit. He's got like cotton white shirt he hasn't changed in like 10 years. Leaves his arms all hairy. Wife tells him to shave his arms off. He's like, fuck you. Oh! Oh! Oh, oh. He's angry. I'm going to lose this. I can already see it. Yeah, I'll go slap fighting right now. You're like, give me the new low. Just want the new low. Just give me the new low. I don't care. Just give me the new low. Oh, they might get me here. They might get me. Look at that bar right there. They might get me. I might get rolled here. It's possible. It's possible I'm going to get a roll right down there. They're going to torch. I'm only down a penny right now. So watch this right here. I want you to watch this. Your eyes on this right here. See that little tick right there? That's the important tick right there. Watch how exact they are. Watch the time right now, too, right? What time is it right now? You got 10 minutes left. Who wants the new low right now? Ask yourself that question. Do the sellers want the new low or do the buyers want the new low is the thing you should be asking yourself. Who wants it? Oh, dude, you're failing, Bears. So far, no new low. No new low for the Bears yet. I'm going to put a stop on this. Hold on. I got to stop now. Trading 8 cents. They're going to try to take me out here. If they get this new low, they're going to roll this down. So be careful. Oh, you bastards. Bastards. I'm still long. I'm good. They didn't get me. I'm good. I'm still long here, but this is bad. I don't like that. So they haven't hit my stops yet. I'm going to leave it on until they do take my stops. I'm pretty impressed they didn't take my stops here. I thought they would have taken me out right there, but they didn't. Do they try to take me out now? They fucking tried. They're likely going to take me out anyways. Did they get the tick on that one? I think they did. Yeah, they got the tick. They got it. They got the tick. They're going to run it down. Three trigger bear cluster here. Be very careful. You see the bear cluster right here? Not confirmed yet, but you can see it, right? It's pretty bad. Right there. Hasn't crossed yet, so it's not guaranteed. They're not giving me any money on this either, on this green bar. Still same price. Oh, come on, baby. Come on back. Oh, they gave me a penny. So I should exit here, and I'm not gonna. So I'm breaking my own rules here. I should have taken the exit on 9 cents right there, and I didn't. They gave me the chance to get out. Sometimes I just like the pain. I don't follow my own rules. So there was your exit right there. That bar was your exit. They're gonna run me down now. They don't love me. Diamonds, baby. Diamonds are a girl's best friend. We used to do push-ups in the Army. And they'd have us do diamonds. Just like that. Just like that, we do diamonds, right? We push diamonds, and they'd be like sitting there just fucking pumping diamonds all day long. And you'd be saying, diamonds are a girl's best friend, drill sergeant. Diamonds are a girl's best friend. Joey Donut, what's going on there, my brother? How you doing, brother? That's my boy out there. That's Joey Donut. That is my partner. You guys want to know who my partner is? You guys know who my partner is out there, right? How about people that are watching this show? How many thousands of you are there right now? How many thousand? Tell me this. Who's my partner? Who's my partner? That's my man out there, Joey Donut. Guy's been with me since day one. Joey D's nuts. Day one. He's the guy that got me to stream. Joe the Anchor, baby. I love that name. Joe the Anchor. You guys all know him. You've known him since day one. Anybody that's been here since day one knows who the fuck Joey Donut is, don't you? That's my boy right there. That's my brother. Joey Pontoon. I love it. Joey Big Nuts. Joey Dog Nuts. Mary the Landscaper's my partner, too. How you doing, Joe? Good to see you, brother. Oh, what's going on right now? Oh, what's going on right now? Joey, when you show up, I'm making money. Joe the Flow, baby. Joe, how many times have we had you on this show? Joe's on like vacation somewhere. Joe, are you been drinking yet? That's right. Hey, that's right. Joey Donuts here, baby. In the house. What up, Joe? What's this right here? What happened? You guys still long with me right now or no? You guys still long with me? Yeah, he's still looking for a house right now. See, he's out there still looking for a house, and he's working his butt off. Is Bork here? Where's Bork at? Is Bork in the house here or no? Where's my man Bork at? Is he not here today? I want to introduce him too. You guys like Bork? I think he's awesome. He's always like good attitude. Take your wheelbarrow of wiener marks with you. Dude, we're not doing this, are we? Oh, don't do it. Come on, Bob. He's so angry. Hey, what up, Addy? Yeah, Bork is awesome. We're trying to bring Bork on right now. We're trying to shower him with rose petals and rose water. David Amos, yeah, dude, they're all awesome. Everybody in there is awesome. This bear is about to get run right over. You know that, right? Where's that bear at? Here he is. He's like, God dang it. No ads, right, John? No ads, baby. 523s. I'm in 523Cs. This looks like a rocket ship setting up, doesn't it? This looks like a rocket ship. This looks like they're going to do the creepy crawly up there. I could be wrong here. They could park it. But this sure as shit looks like a rocket ship to me. I remember these things. We haven't seen these in a while. Yeah, Prime sub, no ads. Yeah, where's Miro? I got to get on Twitter and tell Miro to take the goddamn hedge off. I just posted on Twitter. I said, Miro, take the hedge off for 5 minutes, please. Oh, what's up there? What's going on up there? What's that big bar that just popped up? What's that? Whoa, what's that? Well, come back down here. Oh, there you are. I see you up there. Dude, if that happened, I would freak out. Dan V, what are you doing, brother? Hold on, I missed. What did Dan V say? Where's Dan? Where's he at? Dan V saying Dixie is wrecking everything. Dan, don't stop tipping me, Dan. Hold on, I'm going to open up the chat. Hold on a second. Open up the chat. Dan V, if you're on YouTube right now, you can chat now. Say whatever you want, my brother. Say whatever you want, Dan. Chat is now open, and all you have to do is subscribe. It's like you click the button and just subscribe, and you can chat. There's a bear here. Roar. I know, Turkey, dude. I'm like, what am I going to do here? My plan is to hold him and then maybe DCA or get one strike higher. So I'm not adding anymore. I'm done adding. I'm not adding anything else here. If they burn him, I'm going to grab the next strike higher to take that one right there. No more adding for me. You either do this or we don't. What happened at Mr. Talking Monkey? What happened? I didn't see the news. What happened? Mr. Talking Monkey, what happened? What are you guys saying happened? Crocus? You guys gotta have the faith out there. What happened? Russia? Well, let me read the news. Moscow? By who? Was it the Chechens? Was it Chechens? No, I think it's I think it might be Chechens. Who knows? Nobody knows yet. I gotcha. I heard it was I heard that the Chechens were trying to do something. The State Department released something like a month ago saying there was likely an attack coming. They were warning U.S. citizens not to. Oh, they were very, very calm. Yeah, I don't wish that on anybody. You guys know I'm not a fan of Russian leadership, but I'm a humanist, so I don't want to see anybody die. Yeah, that really sucks, and especially innocent people. It's one of the most tragic things about. It's one of the most. It's more than tragic. I was at 9/11. I was stationed just north of New York City, and I'll tell that story another time. But it's the first time I ever had a loaded weapon in the United States. It was very bizarre. And it was one of the craziest things I've ever seen. No, they want this fuck. If David AMS was here, he would say they're pushing it down to get the price where they want it, right here. They're gonna burn this. They're gonna burn this. They're gonna burn this strike. Yeah, I'm at 6 cents right now. And I'm likely going to have to, when I add down here, I'm going to add some 4 or 522s. Still on the same strike, still haven't added. Same strike, 523s, but I will add 522s here if we get there. I hope they don't pin us in here. This bullshit in here. Who's Kate? Who has cancer? Who's Kate? 5'10", fully armed men in body armor, camouflage with explosive vests, loads of ammo. They got to be Chechens, dude. Those aren't Ukrainians. Kate Middleton. She's got cancer right now? Oh, no way. How old is she now? This is why they didn't want pictures ever released? Yeah, I know you're talking about. This is, I know, they didn't want pictures ever released, right? Could be anti-Putin Russians. Okay. Yeah, she wasn't out in public for a long time, and then they released a picture. She couldn't be more than 40, could she? Like 35 maybe? Maybe 35 or 40? She's 42. I didn't think she was that old. Still young as fuck though, right? Still young. Did they say if it was terminal? No shit. Still long calls here, by the way. Haven't added anything. I think my thought here is they're going to try to burn as much as they can and then run it up. Now, what I don't want them to do is park this. I do not want them to park it. Oh, they did put out a YouTube. Okay. And she's, from my understanding, she's much loved by the public, right? She was kind of scorned by the crown, and she gave up. Did she give up her crown or something? Or she went to go live in Canada, didn't she? For a time? Yeah, she's beloved. I thought she was. Everybody loved her. Yeah, I thought so. And she kind of like got into it. She could have like had it all, but then said, nah, I don't want it. I think. Like, I don't recall for sure. Look at him grind this shit down. Oh, I hate these fucking dealers, dude. I hate these fucking dealers are just sitting there with their butt and they're like, nope, 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 nope. I'm building a new pool, buddy. Sorry. Nope, it's not going anywhere. No, that's the other one. I got the two of them. I got the two of them confused. Fucking dealer unloading Delta, right? Delta neutral, Delta neutral, Delta neutral. We don't have to pay these calls anymore. We're not paying these puts. So Kate's Diana Jr., I gotcha. Delta neutral, new car, new house. Going on vacation. We got a weekend coming up, right, boys? In 2 weeks and a week. Okay, that was Meghan Markle. Okay, I'm mixing the two of them up. Private school bills came in. Oh! No, 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 no. I'm in for 23 cents right now. 23. Oh, look at that. I'm in for 23 cents right now. Oh, dude, shit's all over the place right now. So I just bought some 522s. Oh, no, 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 I'm getting trashed now. 16 cents. Oh, they're fucking me right now. All right, I'm back again. I'm back. I'm good. I just bought some 522s right here. Look at these savages. Woof. The pricing was all over the place. I don't know if it was, I don't know why, but I bought them here for like 23, and then they were like 24 cents right there. Did anybody notice that funky pricing? Look at that blood, doom and gloom. Look at that doom. Look at that stinky down there. I just added some more. I'm gonna get smoked here. I'm probably gonna be down like $400 or $500. 313 right now. Look at that blood. My 523s are worth 3 cents right now. Trashed. Trashed. 523s trashed. I do own 522s now. Oh, yeah, those are green. I'm good. I'm good. Nope, now I'm not good. Prices are all over the place right now. They caught me, Tasty caught me. Tasty caught me really weird right here. I think that's the order flow bullshit that I was talking about. Come on, baby. 315 right now. And a heads up to you if you don't know this. So into Monday towards end of day, volatility begins to pick up and it increases throughout the week. So you're going to expect into next week bigger ranges of trading. You want to be trading the extremes next week. If you are going to trade next week, it behooves you to not hold a position over the weekend and trade the reaction. So be trading the extremes next week. Do not be like fucking around on zero dates, none of that shit. I talked about it this morning at the start of the show. Oh, dude, are you fucking kidding me? They're burning me the fuck down right now. They're burning me down bad right now. So just a warning to you for next week. You're going to get a big market brief over the weekend. I went over it this morning, and I went over it on the website. But starting next week, you're going to see range expansion in a pretty big way. It should last for a period of time. I want to say into summer. So we're in March 22nd, right? You're going to see major range expansion as we head into April, May, and June in the marketplace. It's not going to be the same market that you've seen from October into this week specific, or last week specifically. But you're going to see much more range expansion. Bulls want to be holding 5,000, 5,200 to be attacking 5,300 and then pull back to attack 55, 5,600. I'm not buying anything else today. I'm already down. I'm getting smoked right now. I'm getting hammered right now. But I will hold these things into the close because I'm getting torched. Now, be careful into the weekend. I don't care if you're a bear or a bull. I want you to be very careful. And what you'll do is as you come into the new week, right, into Monday, you're going to watch the extremes start to get traded, and you'll take the next trade after that. You want to see where we open on Monday. You don't want to be coming in on Monday morning and seeing us like on the moon or seeing us in the depths of hell. You want to be picking up those trades there up and down and not be getting caught in the middle of those trades at all in any way, shape, or form. So you're going to see the format of this show begin to get away from 1 minute trades and start looking at like 5 minute, 15 minute, half an hour trades instead of these tighter time frames. And probably for the future, seeing a little bit of a difference in our trading style around here. God damn it. They just torched my calls. Ugh. I got fucked up. They just fucked me on my pricing too. I don't want to say anything on the show because I got in a fight with them. You want to hear a story? I started recording it, and it wasn't happening. And then I stopped recording it. It just happened right now. It just happened right fucking now. So maybe I got to start recording every fucking day or something. The guy from Tasty, the guy from Tasty was like, if you got evidence, let me know. And I was like, all right, I will. I was like, I'll take the post down and I'll start recording. I talked to him via DM. I'm like, I'll record it. I was like, and I'll show it to you, and I won't make it public. And I didn't catch it when I was doing it. And then at the time, I was like, maybe they know who I am. They know my account or something. So I haven't seen. I just saw it for the first time, just now. They order flowed my ass, but they're good company. I shouldn't say bad things about them because I have had problems. I had my brokerage go down 2 or 3 times, like it went down offline, and I called my broker up at Tasty, and they refunded me all my money, like it was nothing. Like, here you go, you get it back. So I can't say they're bad. They're really good if you call them. Like I have to say that about Tasty. If you call them, be like, hey man, what are you doing? They do a good job. So I'm not gonna shit talk them. I was so angry when I made that post. I was fucking furious. It had happened. I had like a run of like 10 or 20 trades where I either was getting order flow fucked or I wasn't getting closing. I would try to close, not market, but limits. And I was a penny on SPY on the bid ask, and they weren't closing, and then the numbers would flip. And I was like, this is bullshit. In my view, do you know how they do this? Do you want me to explain how they do it? So they'll have like a bid ask, let's say, of like 10 or 11 cents, right? I've had this happen on scale too. So what they'll do is not necessarily this company, just companies allegedly. Not this company, but companies allegedly. So the idea would be this. A lot of that order flow stuff, right? It's the time is what they do. So you'll see like you'll see a moment where the market's going to turn up or down. And you'll see on your screen, let's say, it's just hypothetically, you'll see, let's say we're going up. You'll see on your screener that'll say 10, 11 bid ask, right? 10, 11. And if they know, they already know, I don't know if you know this, they already have seconds before. You guys know this stuff? Like, so they already know seconds before you do which direction they're going in at key moments in the market. So there's like software that sits there, and let's say they know that we're going to turn up. And the price on your screen is 10 or 11 cents. And let's say you put the 11 cents in, right? You like click the 11-cent buy button, and they know it's turning already by a few seconds, 2-3 seconds. It'll not fill. And so it flips like 12, 13, 14, and you're like, I'm at the bid ask. So then you chase the price. So you're like, I got to delete this. I got to put in 12 cents, 13, whatever it is. And by the time that move is going and you catch up to it, it's on a pullback again, then they fill you. So now you're like upside down by 2 or 3 pennies. Even if they're going to continue to go up, you paid that 3 cents for the trade. Does that make sense to you? So you're paying the 2 or 3 pennies for the trade one way or another. So they say we don't do this, but they do. They all fucking do it. That's all I fucking trade, man. I trade fucking 0 dates all day long. I can count the milliseconds I can count the fucking milliseconds when I'm buying them. And in some, it's like a casino. Like some of these platforms, not so bad, kind of loose. Sometimes the algos aren't quick enough to know we're reversing. Sometimes they already know. So sometimes you get good fills, but then I've had it on the other side where I'm trying to sell too. Dude, I had a fucking trade. This is one of my famous trades. You guys want to hear? Some of you guys have heard this story. So I was sitting at home watching CNBC, and I happened to have, I think it was Microsoft. Yes, I happened to have Microsoft open on my fucking screen, right, on 0 dates or 1 dates. They were like 0 or 1 dates, whatever the closest goddamn strike was, right? And they came on CNBC. There was a reporter on CNBC, and he starts talking about TikTok being bought by Microsoft, and the guys on the desk like said, "Hey man, no one knows that." And I just immediately like went over and I dropped like 10 grand on like 5-cent fucking calls, like dead calls, like $10,000. I'm just like 100 pack, 100 pack, 100 pack, 100 pack, 300 pack, 100 pack, 100 pack, 100 pack, right? I'm just like ramming calls. And like 15 seconds later, 30 seconds later, it just fucking started mooning. And it went fucking straight fucking up. And I mean like fucking straight, like whoosh. At one point, I think I was up to $190,000, maybe 160, somewhere in there, $190,000. And I'm trying to slam close these fucking things. And I'm fucking freaking out. Freaking the fuck out. First, because I made the stupid ass trade on a lark. Like something I never should have done. And I'm trying to close this fucking trade, and they get the bid ask, right? And they fucking refused to close them for me. Like they just fucking refused. No market, no limit, no, dude. I had like, let's say I had a call that was like 5 cents, and I'm trying to close like fucking thousands of these things, right? And I'm like, and I think the bid ask may have been like 69 cents or something, like 69 cents or something like that. And I'm trying to fucking close them, and I'm like, okay, how about 65 cents? How about 60 cents? And they're supposed to take this shit on market. I know there was a guy on the other end. I know there was a fucking guy on the other end, and he was like, hey, Bob, should we close this shit for this guy? This guy's about to make a fucking killing. And they were like, fuck that. In like 5 minutes, this asshole's going to lose all his money. I ended up closing him for like, I can't remember. It was like I think it was 90,000. Maybe about 120,000. It was like 120,000 or $90,000, something like that. I pissed all that shit away too, by the way. I pissed that money away. So, one of my best fucking trades was like a 5-minute trade. And I didn't deserve the money either. So I'm like, told my wife, I'm like, we're going to go party. I'm like, I don't deserve this money. I'm like, this is stupid. So we went on vacation, and we did everything. I did everything I'd never done in my life, like all the good stuff. And I treated myself, treated the wife, treated the kids. I was gone in a month. It was a fucking awesome feeling. It was fucking, and I'll never regret it. Best story ever. It was so fucking awesome. It was fucking phenomenal, dude. Oh, and that shit came back down, dude, like 20, 30 minutes later, it all came back. And dude, I'm sitting in my, at that time I had this big, beautiful oak desk. That desk I destroyed. I ended up murdering that desk. But it was a fucking blast. It was a fucking blast. I never deserved the money, I even showed the trade once on FinTwit. And then I got yelled at. People were like, you can't be showing that shit everywhere. I think I showed Joe that it was one of my best trades I've ever taken. I was so proud of it. Oh, fuck yeah. Oh, yeah, dude. Once in a lifetime thing. Never had anything quite like that happen. I had a few good ones. I had a couple really great ones on Apple and Tesla, but it was like over a period of time, like a week, 2 weeks, with really good news and events. Like, and I got Burr, but I was like managing the trade. Like 3 weeks fucking later, this was like fucking 5 minutes. Yeah, dude, it was epic. It was fun. Dude, so my wife didn't believe me. And I'm like, you gotta come home right fucking now. I'm like, you're not gonna fucking believe this at all. It was fucking epic. It was fucking epic. Fucking dude, like right place, right time. And who gave it up? CNBC gave it up. And that's what I knew too. That's the other thing. I realized then that that was the first time that I realized that CNBC knows all kinds of shit they don't tell you. Like they know all kinds of shit. That was the first time I realized that they, like, the fact that the people at the desk knew that he knew. I was like, these fuckers know everything. They fucking know everything. They know it before it happens. About 10 grand, about $10,000. I think I started at like 6 or 7. Then I started slamming the buy button, slamming the buy button, slamming the buy button. I'm just like hammering 300 back, 300 back, 300 back. It was fucking epic. The best fucking trade of my life. I didn't deserve any of the money, and it wasn't because I did anything rocket science-y. I was just like sitting in the right place, right time, in CNBC or they weren't supposed to say anything. And the moment they did, the fucking and that's another thing that I learned that day. I learned something else that day too, and I'll never ever forget it. Ever forget it. That's what I was like. I learned a lot of lessons that day from that trade. Number one, if the market doesn't know about it, that shit's coming back. Like if the market's if it's unknown and like all of a sudden it breaks, every time that shit's coming back. I don't care if it's up, down, whatever. They want in. As a matter of fact, afterwards, they torched Microsoft, torched it. And they brought it back up again. And I was like, these fuckers. And I knew then that they were, I knew then that it was all a scam. I was like, that's it. I know now. I was like, they weren't closing my trades for me. It broke on CNBC. They knew about it. And no one was positioned for it. So I was like, I know exactly what's going on here. I'm like, this whole fucking thing is a scam. They parking it? I don't know. I'm still long. I got torched. So I'm going to stay in these bad boys to the close. I'm going to hold these bad boys till like 4:15. I'm holding these bad boys till 4. I can't sell them now. I got 1 penny and 13 cents. I can't sell them. I can't sell them now. I'm too fucked up, so. Soon as we blasted down there, the first rack was gone, and the second rack I bought, Tasty fucked me on the cost. Yeah, oh no, dude, I've gotten paid doing this. I've gotten paid on creepy up the walls. If I get torched, I'll hold them right till 4:15. I got paid the other day. I got paid, was it yesterday or the day before? I got paid yesterday. No, 2 days ago. I bought some zero dates like 2 days ago at like 350. They fucking ran up straight to 415. I got out of them before 415, but I made some bank on that trade too. So we'll sit in them again today, see if they do it. See if they run this shit up. Oh yeah, definitely. And we can burn down in this close too. I mean, we get on 30. You go up 30 handles or down 30 handles, you're gonna make some money. It's usually right around 350 in the afternoon. If you're gonna get craziness, right around 350. I don't do this anymore. I used to do it. It used to be easier to do. So you can't do it anymore. But back in the day, you could do really good arbitrage. Like way back in the day, you do good arbitrage in a close. Can't do it. Too many zero dates now. But back in the day, you could take like almost every day. You could jump on like 3:50 p.m. You come in, you buy yourself like fucking 2 cent, 3 cent calls. And it was really funny. They'd be like this. They'd be like, this is how it go. I'd sit there, right, and I'd buy like 5-cent calls or something, and they'd push them down on me, and I always felt like they were trying to get me to get out. Like, who's that? Like, who's this retail trader slamming 300 calls? And it'd be like fucking 3 or 4 cents, 5 cents. And they would like goad me. And sometimes I would get scared. I'd be like, oh, fuck that. I'm out of here. They're going to go to zero. So I'd sell. And then like 5 minutes later, they would run that fucker up to like 20, 30 cents. So I started to, and the Wall Street Bex guys taught me too. They were like, just hold those things. You hold them to zero or you hold them to 20, 30 cents. And then what you do is just you set a sell price at like 20 cents, 25 cents. And you just fucking wait until they blast that shit up into like 4.15. Close them at 4:14 in the afternoon. And you make fucking bank. Sometimes they don't do it anymore like they used to. They do it sometimes now, but not like they used to. Too many people know about that shit now. But back in the day, nobody knew about it. You guys know about this stuff, right? So I'll teach you something. So I was an original Wall Street bettor, okay? Way back, pre-COVID. And these guys were, they were like professionals in there, and they're like, hey, look, nobody trades zero dates. There was a time when nobody traded them. Like, nobody trades zero dates. And so no one's paying attention. There was never, no one talked about zero dates. There was no discussion about them. And these guys, they would like write white papers, and they'd be like, hey, look, read this. And they would talk about the arbitrage and the mechanics of options, closing options at 4:15, 6 p.m. They would try to like fuck over people. But within those things, you would see these options sometimes go up 300, 400, 500% in value, from like 1 penny to 10 cents. And they would fly up and down like 1 penny, 10 cents, 26 cents, 13 cents, 7 cents. And it's all these machines are working in the background, and because nobody was trading them, you could sneak in and be like, oh, I just made some quick money and I'm out. That was a real deal. That was a real thing back in the day. That was a real true thing that was going on. And then of course it got blown up. And what they would do is this. Oh, wait a minute. 16 cents right now. So this is how it gets crazy. It gets. So you'd go to Wall Street Bets, right? And they would like kick you out, tell you to get fucked, scream at you, call you names. They would ban you, tell you to go away. And they basically, you'd have to like, you couldn't say anything. You couldn't talk. You'd just be reading the fucking thing. A bunch of real traders, real professionals in there, shit posting this, shit posting that. And then once your ban was lifted, you would ask questions knowing how to ask a question and be polite. And you'd have to lay your case out. You'd have to be like, look, my dad's an alcoholic. He's unemployed. My mom is dead. I want to go to college. I'm really smart, and I can't get into the school with free. They want $70,000 a year. My grandmother's dying. Her leg was cut off, eaten by an alligator. Whatever story you told, what they would do is someone would grab you. So what they'd do is this. They would grab you in a DM, and they would say, what's your story? If you can prove to us what your story is, will you bring X amount of, how much you got? $1,000, $10,000? What do you have, right? And so you'd have to provide proof of your story. You have to provide proof of your funds. And they'd say, stick around, get ready. I'm going to tell you what to do. And then they would wait as like a group, and they'd be like, okay, we're going to try to make this guy some fucking money. Professionals. And they'd be like, we're going to try to get this guy $500,000 for college, or $100,000 for his mom's leg, whatever it was. And they would try to run this shit up. And it was usually like this. This is how they would do it, like stuff like this. Dude, they would like, here's some other crazy shit. I got all kinds of fucked up stories. Like, if they let you hang out there long enough, right, and you started making good trades, they'd be like, show me proof. And you're like, okay, here's the proof. And they'd be like, okay, show me some more proof. And they'd be like, show them in the back room, right? Not the back room, but like DMs and shit. You show them the proof, and they'd be like, okay, you're in. And then they let you into the secret place. They let you into Vegas bets. Then you get inside Vegas bets, and there's like a cycle of like 20 to 150 people in there. It was fucking awesome. Baller traders, all retailers with a sprinkle and a real badasses, couple quants, and it was fucking awesome. There was nothing like it. I'm not gonna say who was in there, but I know some of those guys that are in there to this day are on FinTwit, and but it was fucking a great time. I was like all wide-eyed, and I was like a nobody amongst kings. You ready for the music, Dave? You ready for the rocket ship? I'm still long, baby. Still long. I ain't going out. We ain't going out like that today. We need some music. Let's see if I can find some music here. We ain't going out like that. Into the close. Are they faking us out? Look at Apple just poised right now. Dude, I am almost back flat on the 522 Cs. Still only 1 penny on my burned calls on 523. Can we get it? Look at AMD. SPX poised. People are taking the money and running on Reddit. They're like, nope, I'm out. Apple looks great. Sofi still putting along doing nothing. NVDA trying to close some gaps above. Yeah, this song's okay.
Step on the train.
Yeah.
Walking down your street again. Past your door. But you don't live there anymore. It's years since you've been there. Now you've disappeared somewhere like out of space. Some better place, and I miss you like the deserts miss the rain, and I miss you.
Oh man, they might try to park this shit.
Like the deserts miss the rain.
Come on, Bulls. on, just do it for daddy. Send it. Send it.
That's why did I come again? I confess, I've been hanging around your old address.
That isn't too bad of a song. Could be better, but it needs to be mixed or something. Still not letting it happen. No hedge taken off. Come on, baby, just run it.
The deserts miss the rain, and I miss you. Like the deserts miss the rain, and I miss you.
I was up for a minute on this trade on the 22s. Down to 19 right now. It was up to like 23, 24 for a second or two. Still only 1 penny in the 523s. They haven't gone to zero yet. That gives me some hope that they haven't cleared it out.
Walking down your street again, past your door. You don't live there anymore. It's years since you've been there. Now you've disappeared somewhere like out of space. Found some better place.
All right, I got some upside stops on this just in case. I'm trying to catch like 40 cents on 523 or 522 and 10 cents on 522s. I don't know if they're going to do this for me or not. If they're going to do it right up here into the bell, or if they're going to pin me in here. If I walk away with money, I'm going to be fucking stoked. They're going to do it. Come on, do it. Come on, don't do it. Just do it. Just do it. Give me like 30 fucking handles straight up. $12 minutes left. Make sure you get if this does happen, make sure that you've got your stops already put in. You don't want to make sure you get a fill or be doing a market order, one or the other. Dude, come on, just let it go. I love it. They're like the Dow drops 200 points after nearly 40,000. We'll take 200 points.
Oye, dime si pensaba, si ya tu mujer, pelo corto, una rodilla, un plato de ti. Oye, tú me hablas de sexo y de amor, pero yo no quiero saber.
Give me that creepy crawly up the wally. Give me that creepy crawly up the wally. Oh! 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 30 cents right now. 33 right now. Trading 2. Come on, break through there. Get up there and break through there. Smash right through there. Oh, they're gonna park this shit. Come on, baby, run it up the fucking wall. You didn't sell your calls, did you? Be careful of this cross of a big red bar right here. If you want to take some off, take some money off. If you don't want to see that cross come down, then go up.
Slap that ass, motherfucker. Motherfucker, slap that ass. Slap that ass, motherfucker. Motherfucker, slap that ass.
I'm out at 40 cents. I'm still waiting on 523s right now.
Slap that ass, motherfucker. Motherfucker, slap that ass. Slap that ass, motherfucker. Motherfucker, slap that ass. Slap that ass, motherfucker. Motherfucker, slap that ass. Slap that ass, motherfucker. Motherfucker, slap that ass.
Reddit getting blasted right now. Watch this right here. Watch this cross right here. Violence. Remember that. Remember that violence. I still have have 523s on. 522s sold them for profit right around here. Right at 40 cents, almost near perfect. I still got some shitty calls here. These things already burned. I'm hoping I can catch this on the way up right here. They got me down to a penny on those right now. They're like, they want to give shit to me. The buy 22s, man, that just saved my ass. The 22-cent calls right down here saved my ass just now. Just saved my ass. I'm actually green. Like I'm good. These could burn, and I don't care. Not a bad Friday. Two good well, one really good trade, and then this one was kind of shitty, but I saved it. Now let's see what happens these last few minutes here. See this cross right here? On a Friday afternoon. Should I get a bear? I don't know. No, I shouldn't get a bear. I'm leaving, so. Let's see what happens these last few minutes here. Do they pin it here, or do they run it up into the close? Do any of you guys have 522s? Anybody have 522s out there or no? And I want to see what happens here, because I still don't trust this shit. I still don't trust that this isn't going to go up. So I'm going to leave those on right now. I took the 40 and was fucking out. Fuck that. You had him? Yeah, I had him. I had him at 24 cents. I got a shitty fill on him. I should have bought fucking like 19 and 15 and I didn't. That's okay. I'm happy. I'm green right now, so I'll wait and see what happens. Not by much, but I'm green. I'm happy. I can't complain. I want to see what happens here and see if there's any bullshit in here, any kind of bullshit arbitrage. Now, they likely will park this like right in here, and we're done, right? 521.89, but if they did run this up, I'm going to stay in these calls until 4:14. I'm going to warn you of something. I have had fucking calls called away on me. Not quite called away, but I want a warning for you. If you leave these things on until 4:15 and they're in the money, they will fucking take the money away from you between 4:15 and 6 o'clock. They will. You like closing price, let's say you're at let's say you bought them for 10 cents and they go to 20. They will fucking take that bullshit away from you. I've had that happen to me. So make sure you close them at 4:14 no matter what if you are making any money. Like, do not leave calls that are like, let's say you buy them for a penny and they're up 10 cents. Do not leave them on. 2 minutes left. It has something to do with spreads. So, well, I know what they do with the spreads, but if you don't close your spreads, they'll give you the worst possible price. They'll actually manipulate the price after 4:15 to take your money, and then they'll auto close your calls and puts that you've bought and sold, and they bundle them all together and they try to give you the worst pricing after 4:15. That's why you never ever leave. Look at this close right now. That's why you never ever leave spreads on. But I've only recently had that happen to me where they'll call away the money from me. I'm assuming I was like, maybe I owned some calls and they thought it was, I don't know why I did that, but they did it to me. They're blooding it right now. I'm at 0 right now on the 23s. I wonder if I should buy this close for Monday. I fucking hate buying weekends these days. I really hate buying weekends. See, they're going the other way with it right now. See that? Instead of going up, they're going down right now. All the algorithms right here just eating everything up. Look at that. Look at that move right there. Look at that move right there. Coming into the end of the quarter. Look at this right now. Now 3:59. Let's see what they do on this side. We can just get rid of this. We should watch this from. It's cool to watch anyways. Even if you don't know about this stuff, like this is all arbitrage shit. You can come in here and make some bank. Up or down, doesn't matter. Come in here and watch how options change pricing up and down. It's not as good as it used to be. You used to be able to see really good fluctuation in price. Not as much as you used to be able to see. Still 15 minutes left here. We're not done. So, Murder Ogla normally comes in at 350, right? This one went up and down. But I don't know where we're going here. We could go way down or way up. One day we're sitting at an end of end of month, I think, or end of quarter, and I was like, we should go down 30 handles today, and we didn't. And they did it the last 5 minutes. We went down 30 full fucking handles, and we just did one recently. Like a week or two ago, we had a blast down into the close, and then we actually sold it, and then we bought the bottom and ran it all the way up into 415 in the afternoon, live here on the show. So we'll have more of this. My point here is that we're going to have more of this as we get into the end of the quarter. There's some really cool shit we can trade. When we get into the last day of the month, that'll be a fun day. Last day of the month, we can make some serious money. Do not do your whole accounts, but if you have some like if you 1% of your account, you want a lotto, save it for last day of the month. We can make some serious cash. They offset their bearish bets with calls. They get torched, and then you go in, you buy them for a penny, and they come straight back. Yeah, save a little extra for that day. It's a fun-ass trade. It's fun. I normally don't lose that trade that day. And what's crazy is you'll see people on public, and they don't know about the trade, so they're like, yeah, it's going down, bro. And you're like, you don't have no idea what's going to happen. They're going to rip this fucker right in the close. You'll get like a dip down because of all this bearish stuff, and then they just, like, sometimes 11 a.m., sometimes 2 o'clock in the afternoon, and they just fucking ramp it up into the fucking bell. It's an epic trade. Epic fucking trade. Anyways, we're done here for right now. I've got dead calls. I did save my ass just then. I made a great trade earlier today, so I'm happy. I'm gonna see all of you guys on Monday. I do have a family emergency that I have to take care of over the weekend, and I have some server problems now going on in the server. So if anyone asks in the server, I will try to have that fixed by Sunday. It's out of my control at this point. So I did put a ticket in, and I'm waiting for them to get back to me and find out. If you guys don't know anything about AWS, AWS is like their help tickets suck. You're like ask them a question, and they like take like 3 hours to get back to you, and then like, oh, I didn't try that, and they get back to you in like 3 more hours. They're super slow, so I will work on that right away. Next thing would be what? That's it. Just sit on your hands for next week. Don't do anything. Don't take any trades. Enjoy your weekends. Your weekend, and I will be bouncing around this weekend in Discord. I'm going to try to get with Bork and see if we can get a live stream, even if it's for an hour or two, and try to do a walkthrough of the Discord. And I'll be seeing all of you guys sometime this weekend on the Discord. I want to say thanks to all of you. We did a pretty good job, right? Past couple weeks been pretty fucking good. About 75% of the time we're nailing it. So I'm happy with that. If you can nail it like that much, it's pretty good. So I'll be catching back with you guys in the Discord over the weekend. Look forward to, if you're a pro trader, you're going to get a bunch of stuff on Sunday this week too, specifically for pro traders. I'm going to go over some charts in more detail with you on macro stuff and on market breadth stuff and cycles and all that kind of shit, and try to explain some of the stuff that's coming down the pike for you. Another bonus here too is if you are a supporter, you're going to get extended charts, like daily, weekly charts, so you can see the idea of where we're going to be heading in the coming months. Other than that, thanks for spending your day with me. And I'll see all of you guys on Sunday and or Monday morning at 9 a.m. Hopefully I can get some sleep. You guys have a wonderful night, guys. Have a great weekend.